XRP Wolfpack, for those that don't know. That's what the drink says. It'll be up early tomorrow, and I got to drive a long way, so I was thinking about cutting it short with you guys, but I'm not going to do it. I'm going to hang out. We're going to go the full 2 hours tonight. No spinner chain, no. I am super bullish, though. And I even posted in the mastermind this morning that I was super bullish at about, I don't know, it was probably 8:30 this morning before the bull run started. We saw, almost 13% up on the day for XRP. We pulled back a little bit now, but that's okay. I don't think it's going back the other direction. I think this is just a little consolidation before the next leg up. I anticipated a little, and if you're in the mastermind, I told them, I figured we would hit a little friction here at $1.12. Again, not a TA person, but I follow a lot of very smart people out there, blockchain backer, and there's a gentleman in the UK that does a lot of TA analysis on the short term. He's been on it. People are saying this is a fake out. Yeah, I'm going to touch on that because it's not a fake out. I've been here before. When everybody is bearish, that is the bottom. When everybody thinks it's going lower, when everybody thinks, Bitcoin's going to 40K, XRP's going to, 80 cents, and everybody's calling for lower prices, and everybody's so beat up that anytime there's been a rally, they've been disappointed. They get to a point where that's their expectation. And that's when people get wrong-footed. This is exactly what retail does. Retail is emotional, and I would include myself in that category, right? I try to be logical and think about, this is my third market. This is my third market cycle. And if you've been here in the past during these times, I've been telling you guys past week or so, 2 weeks, I feel like we're at the bottom. Sentiment's at an all-time low. We're going to see some relief here. Today was the relief rally. Now, is on the back of some good news. We got the CFTC issuing their guidance tomorrow. We had everybody at the White House today advocating for the Clarity Act, talking with Trump. And yesterday we had the SEC come out with their guidance. So, normally at the bottom of the market, you do have bad news. I think we are in for volatility, but I think the bottom is in for the majority of crypto.
Good morning, everybody. Hello, and welcome back to another episode of your favorite crypto news related channel. And trust me, we've got some groundbreaking news to cover here when it comes to the crypto meeting that happened yesterday and what we're anticipating for the CFTC's first ever crypto meeting today. But I wanted to kick off today's show by reminding our listeners what's happening on the XRP price chart. In just the last 24 hours alone, we watched the XRP price rally from below $1 to north of $1.26 before the time of this recording. Now we're in a very minor pullback here, as we always are, it seems like, with XRP. But here's what I would say. What we've been waiting for is a confirmation of the bottom. And it seems like whether you listen to Blockchain Backer or some of these other technical analysis experts, the bottom appears to be in broadly for the crypto market. Now, it's not every single digital asset. And this is something you may not see on other channels. We're getting a pump in Bitcoin, Ethereum, the XRP ledger, Solana. But as we scroll down through this top 100, guys, there are some tokens that simply aren't participating at the same level. And these are some of the tokens that I think are not going to perform nearly as well as an XRP or a Solana or even a Bitcoin after the Clarity Act is signed into law. So I wanted to spend some time kind of talking about that during today's show. I'm also going to give you some brand new Clarity Act updates from the meeting yesterday. I've got a brand new interview that nobody has seen because it only has about 300 views on YouTube, guys. This is from the CFTC chairman letting us know what's set to happen later today. And these are all topics I really think you guys are going to appreciate. But we already have over 1,200 live listeners here joining us. If you're excited, you enjoy this content, smash that like button, help us pass 589 likes on the program. And we have a standard here. We stick around for some overtime during today's episode. But I wanted to just reiterate what's happening here once again on the XRP price chart. We are seeing a major rally. And even if you're not excited about $1.10 being a position where you're going to cash out or take profit, the reason that this is relevant to all XRP investors is because if this rally is correct and sustained, the bottom is in, and we're already seeing people in our live chat, guys. I got a great laugh in before today's episode because there was somebody out there. I wish I could remember their name so I could call them out. They go, Abs, please don't let this rally happen yet. I want XRP sub $1 just one more time. You know what I did? Theoretically, I blocked him because I don't need any of those messages anymore. I'm sick of the bear market. We're sick of the pullbacks. And if you look on social media, everybody is telling you these digital asset prices are going lower, I just feel very differently. This space has massive momentum, but you don't have to take my word for it. We're going to listen to several industry executives during today's episode that tell you exactly that. They're also going to reiterate the fact that the Clarity Act, it's not dead and gone. It is coming here inside of the United States. And I wanted to kick off today's show with a brand new update that we just got out of Coinbase CEO Brian Armstrong. The man who blocked the Clarity Act in January, he's telling us it's essentially a done deal here in 2026. Here's a clip.
I think what's most important next, of course, is this September have with the Clarity Act. This would make all of the progress that this administration has made durable into the future, so it could survive for decades and decades to come. And make no mistake, there are folks out there who they want to see this legislation not happen, right? Maybe some of the big banks don't want the competition from crypto companies. Other banks are leaning in and have endorsed it, which I think is really powerful. And so if we all come together, I think we can get this bill over the finish line and hopefully get more than 60 votes come September 15th. Thank you.
And it's very bipartisan, I would say. So
very
much.
That is true.
A lot of Democrat support.
There's hundreds of pages of changes that have come in from the Democrat side as well. It's a true bipartisan compromise. And yeah, it's a great work product.
So you guys heard it right there. Not only is it bipartisan, but we're going to get this vote on September 15th. And a lot of people believe Democrats are going to vote in favor of this bill. Now, for all of our daily listeners, I've been showing you this clip over the last 24 hours. I'm not going to play it again because I already hit you with it twice in the last day or so. But what is it stating? This is an executive for the Biden administration that said Democrats already secured key concessions from the Republicans. And now it is time to pass the Clarity Act, because if they don't pass the Clarity Act, it is people like Paul Atkins and CFTC Chairman Mike Selig that are going to pass far friendlier crypto regulation than what's already been agreed to. But you don't have to take my word for it. We're going to play a couple of clips from President Trump here that just came out in the last 24 hours. But I want to hear from you guys. One's in chat if you believe we will get the Clarity Act signed into law. Two's in chat if you think it is not going to happen. And if you want me to cover some more XRP specific content because we're getting the rally, just stick around. I've got some price targets I'm going to be sharing. I've got some TA I think you guys are going to be interested in. So trust me, we are going to be addressing that content. But I wanted to kick off today's show by just reminding people what happened over the last 24 hours. Here's an 8-second clip. Brad Garlinghouse being introduced by President Trump.
Little thing that's happening out there. And Brad Garlinghouse, CEO of Ripple. Brad, thank you very much, Brad.
So clearly, Brad, not only working very closely with the Trump administration, but there was some breaking news that I did not get to share with you guys during the live stream last night. And I think you're all going to appreciate this, because a small group of crypto executives met with Commerce Secretary Howard Lutnick ahead of today's White House remarks by President Trump and industry leaders. Now, in the room, you had Brian Armstrong, C. Dixon, let me make sure I get these names correct because it's very important, Chris Dixon, part of A16Z, Brad Garlinghouse, a part of Ripple, and then, of course, this man right here, who I believe was the CEO of Kraken. Let me just double check that. Yes, the CEO of Kraken was also in attendance. So Ripple, Coinbase, A16Z, and Kraken had a private meeting with Howard Lutnick yesterday. Now, in the conversation, which was broadly focused on the importance of passing the Clarity Act and what that could mean for U.S. jobs, economic growth, and bringing crypto entrepreneurs and companies back into the United States. Now, the group also discussed the remaining hurdles to passage, including the ethics provision and how the White House could help find a path to a bipartisan agreement. Now, why did I think this was so relevant? Because last year I had a clip that I shared from Howard Lutnick, and it was this one right here, where he's describing how a gratis vendor could happen here with the United States economy. And what does this mean? It would mean that the company Ripple would gift software code XRP to the United States government. And this is something we've never seen before, but I do want to break that down in the overtime portion of today's show. I don't want to get too ahead of myself. I wanted to give you guys another update here. This is President Trump. And I may have to go into my bookmarks for this because I got so many videos kind of queued up and prepared for today. But this is President Trump talking about the Clarity Act. And I appreciate your patience here. This is a live program. Here it is. President Trump says the Clarity Act needs to happen, and it will happen in the calendar year of 2026. We're about to pass 10 minutes into the program, guys. If you're having fun, you enjoy this content, smash that like button. We already passed over 300 likes on the program. You guys know the standard, 589, and we stick around. I can also get into some conspiratorial stuff, stuff, right? I know people really enjoy that, as do I. Brad Garlinghouse opening the door for Trump at the end of this meeting, very symbolic, whether it was coordinated or not. Here are the brand new statements out of President Trump on the Clarity Act, and then we'll get into the breaking news for today, as well as some price targets to keep an eye on for XRP.
We launched Project Krypto to modernize rules so that our financial markets can move into blockchain technology. I established the United States Strategic Bitcoin Reserve, making Bitcoin a permanent asset of the United States Treasury, which has turned out incredibly well. I also created the United States Digital Asset Stockpile to hold custody of all other digital assets, and that's exactly what it's done.
So I think this comment didn't get enough attention yesterday. President Trump reconfirming that the digital asset reserve is still in the works behind the scenes. Well, there was only 5 digital assets that were publicly disclosed by President Trump to be a part of this thing: Bitcoin, Ethereum, XRP, Solana, and Cardano. Now, I'm not sure if Cardano is even a part of these conversations anymore. As you guys can tell, Charles Hoskinson was not at this event yesterday, but I wanted to make sure I referenced that. Let's continue.
It's been amazing. 1 year ago this summer, I signed landmark legislation known as the Genius Act. I named it after myself. I didn't want to use my name, so I just called it the Genius Act, paving the way for widespread adoption of dollar-backed stablecoins, and that's worked out very well. Every single American benefits enormously from our country's status as the financial center of the world, and we want to keep it that way. We're leading by leaps and bounds. We've gained so much in the last 16 months, like nobody can believe, actually. Not only that, but we have more money being invested in the United States than any country at any time in history. Money's coming in by the trillions. Our nation's economic dominance drives trillions of dollars in investments, creates millions of jobs, and expands access, credit, and capital so that every citizen has a chance to achieve what we now hear a lot about, the American dream. Young people are looking for the American dream. They weren't thinking about that 2 years ago. New financial technologies are extending this American dominance into the 21st century, and that's why we're focused on creating a clear regulatory framework for pioneers and builders like the people that are with me here, so that they can do business with confidence on American soil. They don't have to go to other countries to do their business. We're ensuring that America remains the undisputed leader, not only in Bitcoin and crypto, but also technologies like prediction markets, artificial intelligence, and much more.
So there you have it, guys. And I want to spend a moment here because we got a great super chat that came in. Thank you to the MacDude04 who said, if he's a 2004 kid, you are way ahead of the game. But he says, do you think Brad Garlinghouse didn't speak yesterday so he wouldn't be accused of pumping XRP or insider trading? I'm not necessarily sure that's where his state of mind was, but here's what I do think happened. I think Brad Garlinghouse has signed several NDAs. I think he knows way more than he's allowed to say. And I think the last thing he wants to do is put himself in a vulnerable or a compromising situation. And you saw those other companies like Gemini, they sprinted to the podium in a moment of desperation. It almost appeared like you had Chainlink do the exact same thing. So I do think, and I don't want to give Brad Garlinghouse a cop out here, but I do think sometimes the most powerful thing you can do is stay silent. And Brad Garlinghouse silence did speak volumes yesterday, but I want to give a big thank you. Every single live donation is appreciated. Thank you so much for the $5, guys. And I'm excited because we are getting an XRP rally this morning. At the time of this recording, we are trading at $1.25. And if you're just tuning into the episode, about 70% of altcoins are pumping right now. Chainlink is on the move. Solana's on the move. Ethereum is back over 2,300. And here's the big one, guys, which is pretty much driving the entire crypto market. Bitcoin is up nearly 14% in the last 7 days, up 6% in 24 hours, trading above $72,000. Now, this is phenomenal because in the last 36 hours alone, in just the last day and a half, we saw Bitcoin go from under $64,000 to over $72,000. And this is the type of bullish momentum that people like Blockchain Backer have been warning us about in order to realize the bottom may already be in for crypto. And that's the question that I want to ask you guys. One's in chat if you believe the bottom is in for assets like XRP. Two's in chat if you think we are going lower from where we are today. But here's what BC Backer said on his X account earlier this morning. We'll have to wait and see how the Sunday night closes out for the weekly candles on Bitcoin. But if it does close here above $70,000, it would confirm the weekly bullish divergence for the crypto market. And then we'd be celebrating rally after rally towards the back end of 2026. And what I think is going to happen here, guys, is because everyone is anticipating that the bottom of the market is going to come in October, I think retail is going to get it wrong. I think that the bottom of the market has already been printed. And this is very risky to say. So let me preface that as well. I am going out on a limb here, kind of making these proclamations, but I do believe that the bottom is not only in for Bitcoin. I think like assets like XRP are way undervalued in this environment. Last summer, think about all the developments. The ETFs weren't live. Clarity wasn't passed. The Genius Act had just been put through. And actually, I don't even think the Genius Act was passed when XRP tested its all-time high. And we were at $3.65. Now we have all those developments and more. The Ripple acquisitions, the RLUSD stablecoin, all these great things working in favor of the XRP ecosystem, and we're trading at a 75% discount. And this is the message that I would send to newer crypto investors. This is the power of dollar cost averaging. A week ago, when I was buying XRP at $1, just like, probably thousands of people were in our live chat, everybody was saying we're going to 70 cents, we're going to 80 cents, and we may still do so. But my confidence is about 80-20 right now that retail is going to get this wrong, and this market is long overdue for a very significant rally. But we already have over 2,100 live listeners. If you're having fun, smash that like button. I think we already passed 500 likes on the program, so I do just want to give you guys a massive thank you. This guy, big thank you for the $5 dono. Mr. QX says, price forecast change for XRP in 2026. Like I've continued to say, if we get a rally here and we get the Clarity Act passed and this perfect storm really arises, I'm anticipating we're going to go far higher than our live chat may think. I'm actually anticipating when we get back above 225, you're going to see me share those price targets that I'm hesitant to share. But let me just say, it's above all-time high. I genuinely believe that. And Q1 2026 really shaping up to be an exciting time, regardless of if you believe in the 4-year cycle or you're excited about the Clarity Act and the bullish momentum we're experiencing now. There is a lot of positivity that I think just isn't priced into the market yet. And that's not just my opinion. That is the opinion of somebody far smarter than myself, blockchain backer, who does this 24/7. But we're going to get into some brand new updates here. This is another update from Brian Armstrong that just came out earlier this morning. And the question he was asked is, what was President Trump talking about behind closed doors? This is something I think you guys will appreciate. Here's the clip.
House yesterday, including our next guest. Joining us right now from Washington is Coinbase CEO Brian Armstrong. Brian, it's great to see you. You were standing next to the president yesterday. He talked about a lot of things. I'm curious if there's anything that you picked up that he talked about either with you or the group that we didn't see on TV.
Hey, Andrew, good to see you. And the big topic of conversation, both at the live session and in the Oval Office, was about clarity. The Clarity Act is coming up for a big vote with the full Senate floor on September 15th. And it represents a lot of bipartisan work. The president was keen to mention that. And thousands of hours from the Senate and the House have gone into getting this to be bipartisan legislation. It's also a good bill for law enforcement to go protect against illicit activity. It's a good bill for the banks. It gives them 13 new powers to go grow their business. And it's good for the crypto companies. And most importantly, it's good for the 50 million or so Americans who own crypto. And so that's the big opportunity we have now to cement all of these changes that everyone's worked on in this administration and make sure it's durable for many decades into the future.
If you were to handicap it at this point, you say it's a winning vote at this point?
I'm pretty optimistic it'll get over 60 votes. And I think both sides got 90% or so of what they want, which, in any deal I've been a part of, that you say yes to that deal. Like any good negotiation, there's a few last minute things people would want something a little bit more or less, but now it's really good that we have a deadline, September 15th. And I've got to give credit to Leader Thune, who scheduled that. There's a lot of competition for that floor time. There's a lot of competing interests. He would not have scheduled this on September 15th if he didn't think it would pass.
Absolutely. And we got to give Thune a huge thank you for doing his job here, guys, because that's what we need to do here in the United States government. This guy he's not doing us any favors, but I don't want to let my frustration kind of boil on that topic. Here's what I think is a great comment. This guy said, why are people so pessimistic during a pump? Sure, it might pull back, but just enjoy the pump for God's sake. Well, here's the thing that I love about that. That is an indicator that we're at the bottom of a bear market. When retail investors are so confident that things are going lower, that's when we finally start to turn around. And that's what we're beginning to see on the XRP price chart, as well as other assets in the market. Now, let me remind you, XRP is continuing to rally at the time of this recording. We're currently trading just below $1.26. These are some very significant ranges for the XRP price chart. And because that guy asked me, what am I really looking for on XRP? Here's the roadmap. I was going to save this for overtime, so you guys can thank Mr. QX in chat. He said, don't be hesitant, share the prices. This is what I'm looking for, guys. Can XRP rally to $1.80? Then can we get to 270? And can we get to 320? If we end up breaking 320, I think we're going all the way to $6. And that's the kind of part that I was hesitant to share, but I am comfortable sharing it. If you guys want that, I'll go out on a limb here. When we break all-time high, I think it's going to be this parabolic move way above 5, probably into the mid 6s. And then I'll do my assessment. I know that this says $13. I've been hearing $13 since I entered this asset class in 2019, but $6 I am optimistic on. So hopefully that's relevant. Big thank you to Brother Broski, who says, I donate $5.89 if I could, but it came in with the High Vibe Tribe Discord today, and it's been 589 days from the Trump dinner with Brad Garlinghouse to yesterday. Now that's a very interesting narrative, and there's a lot of conspiracy theories that people are talking about with this whole narrative. But I want to make sure I stay kind of centered on the topics that we're focused on. And what did he just say? He said the Democrats are ready to support this bill, and he thinks we're going to get the 60 votes that are necessary. Well, let's listen to a key Democratic player here, Ruben Gallego, which I always mispronounce his name, so throw the correct way in chat. He says, if we keep the same attitude that we have for the Genius Act and bring it over to Clarity, we can finally land this plane. And that's a nice way of saying we can get the Clarity Act signed into law. We already passed 589 likes. Just want to give a huge thank you, guys. If you're having fun, smash that like button. We're already getting into some overtime. The goal for today, can we hit 800 likes on the program? And I think you guys are going to love some of the OT stuff I have prepared. Here's another update from the Democratic side about the Clarity Act. Here it is.
Never imagined you were going to end up getting 19 Democrats to vote for it, right? People have said you could barely get this over the top. Good luck, blah, 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 right? Because we worked it, because we were able to work in a bipartisan manner, because we, and to give credit to Democrats and Republicans, even after there was a lot of mayhem fighting, we decided to get back in there, touch gloves, and keep going. We're going to pass a very, very, very good product. The same thing is happening with market structure. Market structure is more complex. That's why it's taking longer, right? That's the most simplest reason. The politics is more complex also, right? But if we keep the same attitude we have from Genius Act and bring this over to market structure, we can land this plane. But we have to try to, number one, you have to actually want to land the plane, right? There are certain elements of politics that would love not to land this plane, to make this a on the left and on the right. And there's those that want to govern and want to land this plane and continue to making sure that we're innovating in this world.
Senator Gallego, this wouldn't be possible. We wouldn't be here.
There you have it. Senator Gallego. We did end up pronouncing his name correct. Miracles do happen, guys. And this is the clip I was looking for, just 20 seconds here. This is President Trump calling on Congress to pass the Clarity Act yesterday. Here's the clip.
So now we need Congress to take the next step by the Clarity Act, a fair version of the Clarity Act, and this landmark structure legislation. It's a very, very powerful structured legislation, which will keep us ahead of China, keep us ahead of everyone else, will open the door to the next wave of innovations and innovators.
So I just want to remind you guys as well, the reason that this is day 2 of the crypto meetings in Washington, D.C. is because starting off today at 1 p.m., I'm not entirely sure if I'm going to go live for this one. This is a 3-hour event here that's going to be taking place. And I don't think Brad Garlinghouse is going to be speaking. So I think I'll just provide a regular afternoon update today. But what's happening is the inaugural meeting for the CFTC's Innovation Advisory Committee. And Brad Garlinghouse is a represented member here. Now, the question that I put out on my Twitter, which people found pretty funny, is I said, will Brad Garlinghouse actually end up speaking tomorrow, or will he just aura farm like yesterday? So I thought that was pretty interesting. But here's what Brad had to say about kind of the White House event, as well as the event that's taking place this morning at the CFTC's offices. Brad said, it's great to be back at the White House alongside Donald Trump, Mike Salig, and Paul Atkins, and the leaders across the crypto industry. Now, the big picture has never been more clear. 67 million Americans hold crypto today. That is nearly 1 in 4. Crypto isn't some fringe industry, and Washington, D.C. knows the crypto voter is alive and well. This president's incredible commitment to innovation and leadership around digital assets in the United States has been profound, and the future is bright. Now, if you've been watching this channel for a long time, you're going to remember the clip that I used to play where I said, you're going to get tired of winning, where it's going to be so much winning. We may be on the precipice of that finally after this long, drawn out, and quite frankly, exhausting for a lot of people this bear market has been very difficult. So I'm excited to see this bullish momentum, but I wanted to provide some updates as to what's going to be happening at the CFTC today. And then we'll get back into some of the content that we have prepared for the XRP price chart in the overtime portion of today's show. But we already have over 2,700 live listeners. If you're having fun, smash that like button. And I can post the link to the meeting. Somebody asked that. I'll do that on my X account. Here's a brand new update from Mike Salig, the CFTC chairman, talking about the meeting that's happening today.
Agency's chair, Michael Seelig. Mr. Chairman, it's nice to see you as always. I saw you yesterday at the White House for this event alongside President Trump, where he was really pushing for passage of the Clarity Act. Let's just get a lay of the land first. Senate's going to vote on this September 15th. How confident are you and the administration it's going to get over the finish line?
We're very optimistic that we're going to get clear rules of the road for crypto asset market structure on the books, and this vote is critical. We've got to get the Democrats to come along with us. They have really obstructed. We want their support. This should be bipartisan. The bill passed the House in a bipartisan fashion. We've got this bill in the Senate. It's very similar. We want to get it across the line. It needs to be a fair bill, a bill that isn't targeting the president or anybody else. It should be neutral and apply to everybody in the same way. We're really excited to get this bill across the line. CFTC stands ready to implement upon the passage of the bill.
Just to quickly follow up on that, was there any discussion yesterday about any updated ethics provisions related to the bill?
Well, the ethics provision is under negotiation. We're looking forward to seeing a fair ethics provision that's not targeting the president or anybody else, as I said.
If Clarity stalls or fails to pass, the CFTC has signaled that it's prepared to unilaterally dial up oversight. What would that look like? What sort of rulemaking are you prepared to take in that scenario?
The CFTC has a lot of authority, and we're not afraid to use that authority. The president has promised market structure for the crypto industry, and that's what we're going to do, whether we have a bill or not. But we're optimistic the bill is going to set the standard. We really want the United States to lead, and having legislation, clear law on the books is the most surefire way to lock in crypto market structure. And so that's what we're focused on today.
But for my clarity, if Clarity doesn't pass, you're still going to pursue regulation related to this.
Well, absolutely. It's really important that we have market structure. We can do that through rules. We can do that through laws. The CFTC has a lot of authority under its existing statutes, as do other agencies. And if we have to utilize that authority to create rules without the supporting legislation, we'll do it. But of course, legislation is the priority. That's what we want to see. America needs clear rules on the books. We'll use rules if we have to, but we're going to focus on the law today.
So I love what he had to say there, guys, but I want to kind of speak on something that came to mind, is that remember when Jake was talking about the Clarity Act, he said the price rally was going to occur with XRP before the Clarity Act gets across the finish line. I feel like we're starting to witness that today. And again, if the bottom is in for the crypto market, I think these asset prices are going to continue to climb. And let me zoom out to give you guys some context, because it looks like, wow, XRP is really pumping. We are coming off not one, not two, not five, 10 months of negative bearish price action for the XRP price chart. And this is really the most significant rally we've seen for XRP dating all the way back to June of 2025. Now, as you guys can see on the RSI, we're getting a relief as well. On the long-term timeframes, we're not near any ranges of resistance. The thing that we have to keep an eye on is how does XRP operate once it gets to that $1.70 range. If we break $1.70, which I know is still a little bit significant from where we are today, if we're able to break that with volume, my goodness, this market may get explosive, it may get exciting, and you may see FOMO enter the space once again. And it's kind of wild to me. And I got to reference this just one more time. Before the show started, I'm reading the live chat from our community like I always do. And somebody's in the live chat saying, Abs, please don't let XRP pump yet. I need to buy it below $1 more. I'm like, I can't be on that train any longer. I am ready for the pump. I'm ready for the moves. I'm ready for my optimism to be proven correct, not only on the price charts, but also with the Clarity Act getting across the finish line. My commitment to kind of studying the Clarity Act over these last 6 or 8 months, I was severely disappointed by the fact that we didn't get an August vote. I was so confident in that. But here's what I will say. The momentum is back, and we're seeing this in Washington, D.C., as well as we're seeing this on the XRP price charts. We did just pass over 2,000 live listeners watching on YouTube. If you're having fun, smash that like button, leave some of your thoughts in chat. The goal for today, can we hit 800 likes? I think we can get there, guys. I believe we're already close to 700. Here's our friend Matt Hogan, the CIO at Bitwise, saying he thinks the bottom is in for crypto.
Well, I think we are near a bottom. So if that aligns with the 4-year cycle, I think that's true. Look, boring, which is what the market has been, is beautiful. Often these crypto bear markets end in apathy. That definitely feels like where we're at. It looks a little bit like some coiled volatility in there that may come up on the upside. So when I look at the market today, I'm feeling pretty optimistic about where we go for the rest of the year.
There you have it, guys. And that clip was from about 48 hours ago. Now, I think it could have done without the background music, which was pretty funny. But here's something else I wanted to show you guys. So earlier this morning, I was scrolling through my X account, and I came across this post right here. And I couldn't even tell. I'm like, am I reading this correctly? This is Grok, the AI for the X.com app. And it's talking about the XRP price chart. Now, here's what it's responding to. Chad Steingraber said, we went up $12 billion in market cap. You want to know what happens with the net inflow of just $1 billion? So think about this. $5 million or just under that came into XRP, and the price from a market cap standpoint rallied $12 billion. So Grok said, this guy asked Grok, what's the answer? Chad Steingraber said, Grok only answers blue check marks. What is the answer to the original post question? Well, here's what caught my attention. And they stated, or I guess the AI stated, them, I should say, that's a joke. Based on the $12 billion market cap jump, alongside the nearly $5 million in net inflows, scaling that ratio to $1 billion in inflows would point to a multi-trillion-dollar market cap move for XRP. At the current circulating supply, that puts XRP in the $40 range. Small net flows already swing prices hard because market cap is just price times supply, not cash sitting in the asset. And this goes back to the market cap multiplier that we used to talk a lot about during the, I guess, 2024 market cycle, whereas the market cap can be extremely misleading. And I don't want to go on a whole diatribe here, but the truth of the matter is, if $1 billion worth of brand new capital enters the XRP token, that increases the market cap at a ridiculous rate. And we're not talking about a 5x or a 10x multiplier. We are talking about a 200x, a 500x. We've even seen 189x multipliers on a very consistent basis. And so this is the acknowledgement from Grok's AI protocol that yes, these are real numbers and this could happen. So I thought I wanted to squeeze that in here. Let's get back into the CFTC's interview, talking about what's happening later today. Then I've got some great XRP TA from the blockchain backer, indicating we may be at the bottom of the market. If you're having fun, smash that like button. It's the easiest way to help out the channel, and I do greatly appreciate it. I also want to give a massive thank you to every single live donation. It really does mean a lot. We're a smaller channel continuing to grow here. And Michelle's been a longtime member, so thank you so much, Michelle. She said, thank you, Abs, for keeping the community engaged during the lowest times. While people on social media bashed XRP, calling it a scam, you guys came out every day giving the people hope. Thank you so much, Michelle. Here's the truth of the matter. I am stating what I believe, right? I believe XRP is not only going to be massively successful, I think it's going to be the top performing digital asset before it's all said and done. So thank you so much for the $20. It really does mean a lot, Michelle. Thank you. Here's the brand new update from the CFTC talking about the meeting that's coming later today, where Brad Garlinghouse will be in attendance.
Because in theory, or not in theory, in reality, the Clarity Act is there to codify this into law. So I'm just wondering how you're thinking about the future here to ensure that if there's a Democratic CFTC under a different administration, it wouldn't unwind all the work that you'd be doing.
We're, of course, going to look to the bipartisan efforts on the Hill no matter what. If we have legislation, we'll implement that legislation. If we don't have legislation, we'll, of course, utilize that existing work that's been developed on the Hill and utilize our existing authorities and do what we can to set rules of the road for crypto. But the bill is really the priority. The bill has to get passed.
Last question on this, just to try to get a little bit more information. Is there a timeline that you're looking at where you would act? Are you already preparing any of this action, or does it have to happen once we see ultimately the fate of that bill?
I've asked the staff to explore and evaluate potential rulemakings utilizing our existing authority, but we're focused on the bill today. Until we get that across the line, and until we have an answer on where the bill is going, we're not going to propose any new rules.
Okay, fair enough. I have to ask you about the other side of this remit as well, of course, prediction markets. This might be the first election.
I'm going to pause it here, guys. We're going to get into the other part of this interview right here with Brian Armstrong. I just realized we're already 33 minutes into the show. We're about to pass 800 likes, so I'm going to be sticking around for some overtime. If you're having fun, smash that like button. But I want to ask you guys one question. One's in chat if you want me to live stream the CFTC meeting today. Two's in chat if you're not very interested, because I want to know if there's significant demand for that, I will go live. But let's continue with this clip, and then we'll decide if we're going to go live later on as well.
One of the other big issues, and I know you've been spending time and meeting with the SEC, as have been others, about the idea of tokenization and really the idea of what kind of exemptions the SEC could potentially put in place to encourage innovation, really in the absence of Congress passing any laws.
Yeah, well, you've got to give a lot of credit to Chair Atkins at the SEC and Chair Selig at the CFTC. They have made it very clear that they're going to continue to publish clear guidance and rules under their existing authority, regardless of what happens with the Clarity Act. So I think they're ready to move forward on that. They've actually, even just this week, the SEC put out new rules clarifying for the first time how crypto projects can go raise money that in the markets that are securities. That's something that we've been wanting for many years. I think the SEC is working on now an innovation exemption about how crypto securities could be traded in the U.S., which tokenized equities. Coinbase has been working hard on this, but we've so far only been able to do it offshore outside the U.S. In fact, we're launching our tokenized equities product next week out of Abu Dhabi for non-U.S. But in the U.S., we should be moving in this direction too. Same thing with single stock equity perps. So there's lots of work that these regulators are doing, and they're going to create clarity regardless of what happens with the Clarity Act itself.
So Bitcoin bounced yesterday. Your stock also bounced yesterday. I'm curious how much you think that was a bounce off of the back, effectively, of the meeting that you had, or it was really off of the bounce. I don't know if it's a bounce, but really in reaction to what Scott Bessent did yesterday.
Yeah, well, I think those are both good theories. I'd like to think that people are reading the tea leaves a little bit on a few things regarding the Bitcoin price. One is that we've been in a bear market on spot crypto trading for the last year or so. And if you look at the prior bear markets, they each lasted about, 370, 380 days. We're basically coming right up against that, where people, they're going to say, well, this one's about over, and it's time for the next bull run in crypto. They're also looking at this September 15th vote for the Clarity Act. And then traditionally, following the Bitcoin halving cycles like October, November, December, these tend to be good months for Bitcoin. So I think there's a good chance we're on the cusp of the next bull market for spot trading in crypto. But what's important is that in this bear market, Coinbase has really diversified its revenue. We're actually only about 12% of our revenue now comes from Bitcoin spot trading. The other things that have been growing in this down market for spot trading are things like crypto derivatives, prediction markets, stablecoin payments, tokenization of real world assets like these stocks that I mentioned. And the big one that's on the horizon is what we call agentic finance, or AI-fi. That one is just getting started, but I think has potentially the biggest TAM, because there's going to be more AI agents than humans in not too distant future. And they're all going to have to, have an economy to get work done on our behalf.
I've got a maybe hard political question for you. This president has been very helpful to the crypto industry, and yet there have been all sorts of questions about the role of this president and the president's family as it relates to crypto. There was an op-ed in the New York Times recently that suggested that much of the conduct may be very well unconstitutional and illegal. And I'm curious whether you think that it represents a cloud over the industry, whether you would prefer, all things being equal, that the family not be involved in crypto, or maybe you do.
Yeah, so this is a complex subject that I know lots of people in the Senate are debating. And, one thing I would say is that the president and the White House have put an ethics offer on the table that could go into the Clarity Act. It requires, I think, moving his funds into a blind trust, or there's different variations of it that are being negotiated back and forth. But that's pretty unprecedented. I don't think there's any actually bill prior to this where the president has voluntarily offered something like that to go into the bill. So there's a real offer on the table. There's some things I know the Democrats would like that's even a little stronger. My understanding is they're going to keep talking and work out some kind of a deal there. But I think the most important thing to recognize is that, yes, the ethics question is big. I'll defer to Congress and the White House and the president on how to solve that. But there's a lot of good stuff in this bill about consumer protection and how to reshore all this back into America. And so I think everyone kind of realizes the ethics part would be nice to have perfect in everyone's book, but the 90% of it, we should not leave the status quo and leave Americans unprotected as
a morass of state legislation to operate in the U.S. That's just going to ensure this all goes offshore.
Totally agree, guys. And I just got a brand new update out of Eleanor Terrett in regards to the meeting that's happening later today. Now, I wasn't anticipating that. It appears like almost everybody in chat wants to go live for the CFTC meeting. That meeting is scheduled for 1 p.m. today, starting only 45 minutes from now. But I'm going to take you through some of the updates. And then if I can, I will go live. You guys have my word. But that is only 45 minutes away from right here, right now. So if I was going to go live, maybe I should just stay live until the event starts and then just play it for you guys live on this stream. So if you want that to happen, smash the like button. I guess the goal for today, can we pass 1,000 likes? And maybe I'll end up doing like a 4-hour live stream. I'll have to call my boss and see what he says. I don't have a boss. I don't know why I said that. But here's what we're going to get into next. This afternoon at 1 p.m., the CFTC will kick off the inaugural meeting of its advisory committee to discuss crypto, AI, and prediction markets. Now, many of the executives who attended the White House meeting yesterday will be there, including additional leaders from across the crypto industry, TradFi, and prediction markets. Now, I'm going to show you guys who's in attendance and who's scheduled to go to this event. But I'm also going to show you who's not on this list, and that might be just as important. Now, as you guys can tell, Ripple CEO Brad Garlinghouse is on the first page, right below the NASDAQ CEO and chairman. We're also going to have Rutgers University. We've got Polymarket. We've got Coinbase, Uniswap, BitGo, all in attendance. Those are some major companies. BitNominal will also be there. Krypto.com is scheduled. Chainlink with Sergey, who's I think he's going to be huge, guys. This is another big prediction I have. You know how Brad Garlinghouse is such a mainstream figure in crypto? I think the Chainlink CEO, he's next up. He's who Charles Hoskinson was supposed to be during the last bear market. Now, I know it's a bold claim, but I think I'll be proven correct over these next couple of years. A couple of other big names that are going to be there: Franklin Templeton, Kalshi, Consensus, Anchorage Digital, Grayscale, Paradigm, OKX, Etherealize. I thought that was Ethereum for a second. And let's continue here. We've got Kraken, we've got DraftKings, we've got Gemini, and Solana. So just reading this list objectively, like I'm seeing this for the first time as well. Chainlink is here, Ripple is here, Solana is here, Ethereum is represented. Where is Michael Saylor? Where's the big Bitcoin representation at this meeting? That's something that's worthy of noting. Now, I'd also like to point out that Charles Hoskinson and Cardano were major parts of the Trump administration at the beginning of this whole ordeal. He's not on this list as well. So somehow, some way, Charles Hoskinson has fallen out of the mix. But as you guys can see, I'm going to zoom in on it for you. Ripple CEO Brad Garlinghouse is scheduled to be in attendance. Now, let's see if there's also yes, there is. There's a schedule here that's going to be coming out. So we've got the introductions for 30 minutes from 1 p.m. to 1:30. That's when we're going to see the CFTC chair, the Innovation Advisory Committee's chairman speak, and we'll also see the Innovation Advisory Committee's DFO speak at this event. Now, once the actual topics kick off, this is what I think is pretty interesting. Topic number 1, the emergence of crypto markets and early regulatory approaches. That's a nice way of saying the Clarity Act. Number 2, the evolution of state licensing regimes and the resulting of patchwork of requirements. So what are they saying? Providing a broad framework that applies to every state in the United States. Number 3, the absence of a comprehensive federal market structure framework. That's definitely the Clarity Act as well. So pretty cool. Now we're going to talk about some of the other things. Recent efforts by regulators to provide greater transparency and regulatory clarity. That's also on the agenda. Opportunities to modernize existing rules using current statutory authority, and areas where regulatory action can complement future congressional legislation. So pretty cool. This is all going to be centered around essentially what can we do now that the Clarity Act is on pause until September 15th. But let's go back to the CFTC chair. I'm going to skip past the AI portion of this interview because we've heard enough about AI. One's in chat if you're anti-data center. How about that, guys? Let's continue with the Clarity Act discussion. Here's what the CFTC had to say about the meeting coming later today.
Update when it comes to the conflict in Iran. Can you give us any update on your
To be clear, codified.
and these companies that you...
That's our focus. We want this to be clear, codified law in the books, and we'll take it all the way up to the Supreme Court.
So if it goes to the Supreme Court, though, and the judge rules that sport contracts are gambling, how will that impact the CFTC and these companies that you regulate?
To the extent the Supreme Court were to rule against us, of course, we'll follow the law.
All right. I wanted to ask you about the agency's June 2026 proposed rule, which does put some of these guardrails in place. Do you think that you'll be able to finalize this before the end of the year? And with everything that is going on in this market right now, what is most important to you in terms of anti-manipulation and also consumer protections in terms of really getting it on the books?
We're making fantastic progress in finalizing these rules. We received a lot of really substantive and helpful comments, both through the advanced notice of proposed rulemaking and the newer Rule 40.11 rulemaking proposal. And we're hoping to finalize that very soon. We're also moving forward we've proposed some rules on record keeping and reporting. We're hoping to finalize that. And we'll have some new rules proposed very soon.
I'm wondering what lessons you've learned when it comes to some of the more contracts. There was a lot of talk at the beginning of the conflict related.
All right, guys, it appears that they shifted away from kind of the crypto discussion during that update, but it looks like we're going to be streaming all the way until this CFTC event kicks off. So if you're having fun, you're enjoying this content, smash the like button. We're right about to pass 1,000 likes on the episode. So I do want to give you a huge thank you. And I wanted to play a couple of updates here from the BC backer himself, somebody who I really, really respect when it comes to the TA, but also as a person, he's a great guy. I met him in Vegas a couple of times. But what he gets into right now is how the bottom may be in for Bitcoin and how this could play a significant role into what happens next for XRP. Now, if you're just joining the program, XRP is continuing to rally as we record this episode. There's been no major significant pullback here on the XRP price chart over these last 24 hours. Now, we are reaching an 88 on the RSI. This thing may blow off here. And since I'm going to be live for the next few hours, we're going to continue to update you guys on every single one of these topics as they come across. I'm not sure if I'm going to be live for a few hours, but I'll definitely be here for a while. Here's what the BC backer had to say earlier this morning about the Bitcoin pump we're seeing and what this means about the bottom of the market, because to me, I'm excited. Here it is.
We're bringing you the latest cryptocurrency news and analysis. Today, we'll be taking a look over here at the Bitcoin price chart, along with the total market cap of crypto, the altcoin market, and of course, the XRP price chart, as Bitcoin sits a little bit above $71,000 as I record this morning. And we've seen an absolute blowout of the shorts here over the last 24 hours with over $3 billion in liquidations of shorts, as we've seen the price of Bitcoin just catapult up here from about $64,000 to as high as $72,000. We've seen the total market cap of crypto hit a little bit over $2.4 trillion. And now XRP getting back to about $1.15, $1.16, as we're awaiting on these triggers to be confirmed here in the crypto market of bullish divergences. So obviously a huge move here in the cryptocurrency market in the last 24 hours. These are things that we've been talking about in here. It just kind of goes to show you, though, like you look over the past couple of weeks and how pessimistic the sentiment got in the market, right? We're sitting here looking for like an ABC to fully work out throughout here. It goes through a 29-day range, doesn't even have the weakness to be able to scoot down there and grab that new low and just blows to the upside. So it just really tells you, really, even over these last several weeks, while people were very scared of the market, underneath the hood, it was actually incredibly strong, even stronger than what I thought, that we'd have to sit here for a little bit longer before we could do that kind of move, that it couldn't even squeak out, sweeping that little low down in there to go ahead and surge up there and start the move. Fortunately, I have 80% of my capital re-entered back into the market. So I still have about 20% to kind of figure out how I want to handle it here on any type of corrections that come in the market. But definitely there's a big weight that's lifted when you see that type of move, when you're taking those stabs down in here. And you have so many people on social media thinking that's wrong, people waiting for 40 to 50K. And this clearly shows you there was a massive offsides that happened in the market. And if you recall back at the top, back in October, there was a massive offsides, right? We saw a massive long liquidation happen from the very top. Now what happens at the bottom? Everybody sells the bottom looking for lower, and boom, they get liquidated. And that's really the story of markets. And I always try to say that, like, when we get to the pivotal moment, the crowd is going to get wrong-footed. It's one of those things I talk about a lot. It's one of those things I tweet, right? There's three things that are true in life: death, taxes, and the crowd groupthink gets wrong-footed at reversals. Because of course I'm presenting that idea that, hey, waiting until September or October, well, you need to have a lot of things go a different way, especially with on-chain data, because we've already hit the levels that historically have marked bottoms. And
this is how I know we're either really close to the bottom or the bottom is already in. The average retail investor, the people who were talking about Bitcoin's going to go to 200K. Now those exact same individuals are like, I'm not buying Bitcoin. I had a conversation with a guy in my personal life a few weeks ago where the guy was like, I don't even want to hear about crypto. And I was like, listen, these same assets, they're 70% down from where they were last summer. If you haven't touched this asset class, now would be a great time. This person reached out to me in the last 24 hours saying, is it too late? That's just how this market rocks and rolls. It's just the way it is. And I want to give a huge thank you to Joseph Ray here, the official surfer. Great dude. Met him in Vegas as well. Thank you for the $10, Joseph. He says, hype pump simply from Trump saying hyperliquid. Imagine what will happen when everyone can speak about what's really going on. I agree. And this is the part that really speaks volumes to me. Brad Garlinghouse being in attendance, being a familiar face, having a position on camera for the whole world to see. These are things that are not insignificant, regardless of if he stepped up to the podium or not. So really, really cool. We did pass 1,000 likes. Want to give a huge thank you guys. If you're having fun, smash that like button. If you could, somebody DM me the link to live stream the CFTC's event. If not, I'm going to look for it on my own in the background as this video plays, but it would be very helpful. DM me on my X account so I can play it live for you guys. And I got to give a huge thank you to this $50 donation right here. You don't know how much these mean, guys. Big thank you. Thank you for all that you do. I appreciate you, sir. Thank you, Kai Cat Kai, for the $50. I'm not sure that's a great username, but big thank you. And I say that in a joking manner. Let's continue with the clip and we'll break it down.
Actually took until that moment of 364 days or whatever you want to say in 2022 for the on-chain technicals to hit. And of course, we had already hit them here in June. But, you know, this is just people who are leveraged. This is people who have the courage to find the ability to get margin and borrow money and trade. You have to think about what most regular people do, or most normies, is that they're not using leverage. They're just spot traders, or using their Coinbase, or using their Robinhood. They don't get forced back in. So what you have is, of course, a tremendous amount of sidelined participants right now watching this thing rise and surge. And we know that because of this figure right here. If this is what the people who are using margin and leverage are doing, then certainly these spot players are sidelined right now. So this will be an interesting moment. We talk a lot about the wall of worry, and we'll see if that's what we start doing here. Now, of course, all the things we've talked about in here have been the bullish divergences, getting back to the 300-week moving average. We've pointed out how even here on the MACD, when we move out to the monthly time frame, the huge time frame when this occurred back in 2022, right? The bottom was already in. And so now we're getting some price action to follow it up. And so, you know, for the last, couple of weeks, we've been talking about the confirmations we now need to see. The thoughts have been that we'll see some type of explosive move happen in here after we bull flag or ABC throughout in here, and that we'll want to see price shift back up, likely quite aggressively. But really on the technical charts, there's really two things that will confirm that the move has juice to it, that we are solid, we are good. And that, of course, is going to be if we can close this weekly candle here up a little bit higher, or even with where we're at, to confirm the bullish divergence on the weekly time frame.
And there you have it, guys. I thought that was a great analysis from BC Backer. Now, we are getting some brand new updates I think you guys are going to enjoy, because Brian Armstrong is live on several different platforms this morning doing a media push to get the Clarity Act across the finish line. I just found two brand new updates I think you guys are going to appreciate. But if you're having fun, you're enjoying the stream, smash that like button. Let's see if we can break records today, because I'm going to be staying live for the next few hours, breaking down everything I can. And if the XRP price chart continues to move the way that it has, we're going to have some really exciting things to celebrate over these next couple of hours. Now, this price chart is all the way at $1.26, up over 25% in just the last 36 hours. And this is in response to what I think is the meeting that we saw yesterday, as well as the Clarity Act progress that we're witnessing behind the scenes. But here's a brand new update from Coinbase CEO just about 30 minutes ago. Here it is.
The current status quo today is that there isn't much clarity about what the rules are. And so we are seeing a lot of ordinary Americans get harmed by using some of these products. Sometimes they're offshore. A lot of the crypto business has gone offshore to other countries, totally outside the US purview or regulatory perimeter. So this bill creates lots of consumer protections. It has about 100 pages of text that's new tools for law enforcement here in the US. It strengthens America's soft power around the world and can repatriate a lot of these funds and bring it back onshore. So it's definitely a strong consumer protection bill. It's a pro-law. It protects us from bad government or overreach, which might try to take away our freedom. So it actually accomplishes both at the same time.
And I think the biggest change here, guys, is, again, Democrats can market this as a win for themselves, because if they don't pass the Clarity Act, Trump's SEC, Trump's CFTC, they're going to provide those guidelines and regulations with zero concessions. But if Democrats vote in favor of this bill, then Republicans are going to give major concessions. The stablecoin yield, the ethics issue, the stuff that we've been breaking down for the better half of 6 months. So I'm excited, but here's where it gets really interesting. Brian Armstrong was also live, this is about 30 minutes ago, predicting he thinks we see a $300,000 to $400,000 Bitcoin. These are the bull market clips we got to get familiar with. Here's another one.
20 seconds left. Would you forecast $100,000 Bitcoin by the end of this year?
I think it's a good chance. I don't know exactly what, I think over the next couple years, by say 2030, I think it's very likely we'll see a 300,000 and 400,000 Bitcoin, and we'll see how it goes.
So guys, I want to hear from you. If Bitcoin is $300,000 to $400,000 by the year 2030, what do you think the XRP price chart would be worth at that point? Because I think it would be not only significantly higher than where it is right now, I think it would be well into the double digits at a minimum. And so these are the topics that I find interesting, guys, and I'm excited to be able to break these down with you all. Now, XRP is climbing right here, right now. It's continuing to move up another penny since I gave you an update about 2 minutes ago. We're currently trading at $1.27. And like I was telling you guys, some really interesting price targets that I'm going to keep an eye on. $1.80. Can XRP get up to those ranges? If we break $1.80 with volume, I'm going to be watching the 225 to 270 range. If we get past that, I'm looking all the way back above $3 once again. And one thing that I think you guys will understand better than most is that when crypto markets are in a downturn, when we're in a bear market, those rallies are extremely long. They're drawn out. They're exhausting. During the bull markets, it's parabolic. It's bullish momentum. It's coins doing a 2x in a 24-hour period, coins doing a 6x over a month. That's the type of stuff that happens. So if this is the beginning of the next rally, and I mean significant rally for the XRP price chart, I would anticipate things are about to get far more bullish than the average investor realizes. Now, our veteran investors out there, they're probably expecting, we're going to get some resistance. I don't want to be too optimistic yet. I totally understand that way of thinking, but here's what we can point to. If XRP rallies above $1.70, it would be very healthy to back test $1.25 again and then rally up to the brand new all-time highs like we've been discussing. All of this could happen in a very short period of time, and that's why we got to keep an eye on the short-term timeframes for the XRP price chart, because when momentum and significant momentum enters this market, XRP rallies unlike any other asset you've ever seen before. If you've never been through an XRP bull market, trust me when I say this project outperforms everything else. But we already have 2,000 live listeners I can see here on my screen. If you're having fun, smash that like button. I'm going to pause just a little commentary here and give you the update from President Trump yesterday talking about the Clarity Act and the Genius Act and everything else. But then we're going to get into the brand new update, which is the CFTC's policy meeting, which is set to kick off only 25 minutes from now. So I do want to give a huge thank you. Let's listen to President Trump.
And the spirit of innovation that built America was under serious attack like never before. And nowhere was that more true than crypto and other new financial technologies, where we were going to be taken to the cleaners by China and other countries. The radical left tried to crush these developments with crippling regulations, brutal restrictions, weaponization. They used weaponization, political weaponization, and constant targeting that drove innovation overseas, and they wanted to drive it out.
One quick comment. This guy says, you're pumped about a $6 XRP. Are you kidding me? Dude, I've been here since 2019. I was buying XRP before they rolled out the COVID crisis. So yes, I will be excited when we get to a $5, $6 XRP. I just want to make that point clear.
And at the end of toward the end of the campaign, if you remember, they decided they liked it very much because there were over 100 million people that were liking Trump a lot more because I was in favor of it. They were against it, and they became very much in favor of it. But by that time, it was too late. And besides, those days are all over. That was a terrible period of time for a lot of very good, very honorable financial people. On day one, we fired Joe Biden's rogue SEC chair, Gary Gensler. I think we like Paul better. Do we agree? We like Paul better? Number one, he's smarter. He's also smarter, by the way. But we fired him. We got him the hell out of here. We terminated the so-called Operation Choke Point 2.0, which
guys, KG is back in the house. I got to give a shout out to my buddy. Great to see you.
What the name of their operation was, weaponization. And we ended the war on crypto once and for all. And it's been booming. It's been doing big, and nobody's been able to break in. China would like to break in. They're still trying, but they have been able to. I signed a historic executive order banning any attempt to create a central bank digital currency. We launched Project Krypto to modernize rules so that our financial markets can move into blockchain technology. I established the United States Strategic Bitcoin Reserve, making Bitcoin a permanent asset of the United States Treasury, which has turned out incredibly well. I also created the United States Digital Asset Stockpile to hold custody of all other digital assets, and that's exactly what it's done. It's been amazing. 1 year ago this summer, I signed landmark legislation known as the Genius Act. I named it after myself. I didn't want anyone to I didn't want to use my name, so I just called it the Genius Act, paving the way for widespread adoption of dollar-backed stablecoins. And that's worked out very well. Every single American benefits enormously from our country's status as the financial center of the world, and we want to keep it that way. We're leading by leaps and bounds. We've gained so much in the last 16 months, like nobody can believe, actually. Not only that, but we have more money being invested in the United States than any country at any time in history. Money's coming in by the trillions. Our nation's economic dominance drives trillions of dollars in investments, creates millions of jobs, and expands access, credit, and capital so that every citizen has a chance to achieve what we now hear a lot about, the American dream. Young people are looking for the American dream. They weren't thinking about that 2 years ago. New financial technologies are extending this American dominance into the 21st century, and that's why we're focused on creating a clear regulatory framework for pioneers and builders like the people that are with me here, so that they can do business with confidence on American soil. They don't have to go to other countries to do their business. We're ensuring that America remains the undisputed leader, not only in Bitcoin and crypto, but also technologies like prediction markets, artificial intelligence, and much more. And we're leading in every single one. And I will tell you, the AI, the artificial intelligence, we're way ahead of number two. Number two is China. And I never want to underestimate China, but right now we're way ahead. President Xi's coming on September 24th. We look forward to it. We'll probably be talking about AI and a lot of other things, but we're doing tremendously well, largely because of people and some other friends of ours that are on the board, and they'll be here in 2 weeks, I understand. In May, Chairman Selig authorized the first ever true Bitcoin perpetual futures contract on a CFTC registered exchange, first time. I understand that Mike is also working to bring hyperliquid into the United States in a fully compliant and legal fashion. It's working very hard on that. We would really like to see interest rates come down. You know, in the old days with interest rates, many of you are too young to know this, but when we announced good numbers, interest rates would go down. And the theory was because the asset value became so good, it became so prime. But now when we announce good numbers, which we're doing all the time, they keep driving the interest rates up because they're so afraid of inflation. And they shouldn't be. They should allow interest rates to go down. When you announce good numbers, you shouldn't drive them up. They keep.
So I want to show you guys another brand new interview that just came out. I think President Trump made those statements. We kind of watched them yesterday.
Ensuring that America.
This is Brian Armstrong from Coinbase on CNBC about 10 minutes ago. So I showed you a little highlight of that interview. We're going to break down the details here. We already have over 3,800 live listeners, guys. We're going to be playing the CFTC's live meeting, which kicks off in just under 20 minutes here. So I'm very excited about that. Stick around. We're going to break down all these topics. I'm going to find more content in the background as well. Here's a brand new video, and we'll talk about it. I haven't seen this yet, so let's react live.
Remains the undisputed leader.
For Congress to send the Clarity Act to your desk for your signature.
That was President Trump meeting with tech and crypto leaders at the White House. The president and chair of the SEC are calling for Congress to pass the Clarity Act. That would decide which government agency regulates digital tokens rather than allowing crypto companies to operate in a legal gray area. Let's bring in the co-founder and CEO of Coinbase, Brian Armstrong. He was at that meeting yesterday. Really appreciate you joining us, Brian.
Yeah, thanks for having me.
Okay, so let's get really, really concrete here. You've spent years saying the biggest problem in American crypto is a lack of regulatory clarity. So if the Clarity Act passes the Senate in September, which it's up for a vote then, ultimately becomes law, what changes for an ordinary Coinbase customer that actually makes them safer?
Yeah, so this bill, the Clarity Act, it's coming up for this vote on September 15th, a full Senate floor vote. It has a number of consumer protections that would make sure something like FTX could never happen again. It has strong tools for law enforcement to go after illicit activity. It also has the opportunity to create new products in crypto that would benefit Americans, including earning rewards on their stablecoin balances, the ability to go raise capital in crypto, capital formation or issuing securities. Like that's something that could be much more efficient, have lower fees. And I think just broadly, it would have a regulatory checkbox that would mean that lots of different companies could begin to adopt crypto technology to update every aspect of the financial system. People sometimes still have this misconception that crypto is really just about Bitcoin, and it's it's great that the Bitcoin price is now coming back up, but it's really updating all aspects of financial services, and it's how America is going to continue to lead as a financial and technology hub.
I covered the FTX saga and that trial, so I definitely remember that. But I want to push you, because one of the criticisms I hear from people about the Clarity Act is that it could make the rules clearer but weaker. So how do you make sure companies can't take something that looks and feels like an investment, call it crypto, and then end up giving ordinary people fewer protections?
Very important. I'm going to play that. I did find the CFTC's link, guys. So this event is only 16 minutes away from kicking off. So I'd encourage you all to stick around. I think it's going to be interesting. Hopefully, and this is what I said yesterday, hopefully we hear from Brad Garlinghouse. And I think it's much more possible we hear from him today as opposed to the White House meeting that we saw yesterday, guys. But we already passed over 1.2 thousand likes on today's program. If you're having fun, smash that like button. I just want to give a huge thank you, especially to Kai in chat for the $50 dono. Every single donation is appreciated, my friend. Let's finish this interview. And like I said, 15 minutes away, we'll break it down.
They'd have if they bought a stock.
Yeah, so I really disagree with that. I mean, the current status quo today is that there isn't much clarity about what the rules are. And so we are seeing a lot of ordinary Americans get harmed by using some of these products. Sometimes they're offshore. A lot of the crypto business has gone offshore to other countries, totally outside the US purview or regulatory perimeter. So this bill creates lots of consumer protections. It has about 100 pages of text that's new tools for law enforcement here in the US. It strengthens America's soft power around the world and can repatriate a lot of these funds and bring it back on shore. So it's definitely a strong pro-consumer protection bill. It's a pro-law enforcement bill. It's good for the banks. It's good for crypto companies. And therefore, it's good for ordinary Americans.
So one of the things that, as people talk about the Clarity Act, that I've heard is, this is exactly what we didn't want to happen with crypto. Sort of the OG crypto brothers that were really liked the fact that there was something that pushed back against the profound distrust of governments and financial institutions. I mean, Coinbase, you're a S&P 500 company. You work with some of the world's largest financial institutions. You're lobbying Congress, appearing at the White House. What do you say to people that think that crypto has just embraced the establishment?
Yeah, I mean, that's certainly a comment that I've heard from people as well. And I think the very early people who got into Bitcoin around, 2012 or 2011, some of them were almost like anarchists. They didn't want anything to do with the government. But what we realized is that for this technology to actually benefit people around the world, you have to work within the existing system. And unfortunately, in the last administration under Gary Gensler, he really kind of went to war against crypto and unlawfully tried to attack it and curtail the entire industry in the US. And it was because of the lack of regulatory clarity that bad government could actually take away our freedoms. So as I've worked on this Clarity Act, along with all the hard work the Senate and the House have put into it, what I've made the point to folks is that by having clear rules, it actually protects consumers and it protects us from bad government or overreach, which might try to take away our freedoms. So it actually accomplishes both at the same time.
Pretty positive statements there, guys. I got to emphasize this. XRP is continuing to rally. We started off this episode at $1.24. We are now trading as high as $1.29 on the XRP price chart. And I'd love to hear from you guys. Do you believe XRP will rally above $1.35? One's in chat if you think that happens today. Two's in chat if you're not that optimistic just yet. Let's see what happens here. If we're able to get to $1.32 with volume, I think things are going to get exciting, guys. Nobody has the answers, but I've got to admit, we've been through the pain. We've been through the ringer. It is time for some optimism here. So I'm going to celebrate, and I'm very excited. I got to be honest about it. Very excited that the bottom could finally be in. But let's continue with this interview. And like I said, only 13 minutes away, this event is set to kick off with the CFTC. We're going to be watching that live and breaking it down as well. Here's the end of that clip with Coinbase CEO on CBS.
Yeah, Brian, though, I mean, you have this establishment embracing crypto. Obviously, President Trump was a very big proponent during the election. I was at the Bitcoin conference in Nashville when he spoke. There was a lot of excitement there. But his family has also made enormous sums of money from crypto while his administration is essentially rewriting crypto policy. Does that conflict of interest damage the credibility of the reforms that you're pushing for, that clarity that you're pushing for?
Yeah. So I know that the Senate and the White House are working on some ethics provisions, which could go in the bill. And obviously I'd defer to them on what they think is best there. But one thing I'd point out is that the president and the White House have actually offered up an ethics provision already that would go into this bill. And it, to my understanding, is the first time that's actually happened in any piece of legislation. It's not typically a requirement of the executive branch to have that. But in this case, the president has offered up something which would require putting any of these assets for him and his spouse into
but Brian, what would you say to a Coinbase customer that says, hey, you know, I just feel like I want to be part of this. And I feel like the president and his family are rewriting the rules to their own benefit. And I'm not getting to be part of that rewriting.
Well, I mean, I think everybody should benefit from crypto. I'll defer to the president and the Senate on what kind of agreement they want to have. These are nuanced issues, by the way. Just as an example, you know, what can you, if your adult children are doing something, you know, I understand the argument that it could have some indirect influence, but you know, typically in America, we don't like hold someone accountable for something that another adult did, right? So I think you have to be very careful to target these kinds of things toward elected officials and have clear rules. And that's the kind of offer that I think the White House has already put on the table. The Democrats are asking for a few additional things. My hope is that they come to an agreement because honestly, the other 98% of this bill, which has nothing to do with ethics, would be very important for America. And frankly, if the bill doesn't pass, I don't see how that serves anyone, and it doesn't have any ethics provision that would get that would change this outcome for the president either.
Yeah, it's a fair point about children and parents, and you can't be held responsible. But I do think there were a lot of people that were frustrated with the Trump meme coin and some of the folks that lost out on that money. But that is separate from the Clarity Act, and I think you're right that more clarity, more regulation could make this a potential space for people to at least feel more comfortable participating in. Brian Armstrong.
You know what's so funny, guys? And I don't mean to be rude in any way, but why is a CBS broadcaster telling us what she thinks is best for the crypto industry? I doubt this person even owns digital assets. There's like that famous LeVar Ball quote in a joking manner, stay in yo lane is what they say. But I do want to give a big thank you to White Collar Trucker here, who said, check out the XRP ETF volume above $50 million. I did see we hit $51 million worth of inflows on the XRP ETF today. And if you're just joining the program, we are right about to pass $1.30. This is some key ranges here, guys. I'm very, very excited about what we're witnessing on the XRP price chart. We are up nearly 30% in just the last 36 hours. And I think if everything goes according to plan, the bottom may be in, not just for XRP, but for the crypto market at large. And we're about to play another brand new update as we wait for this CFTC meeting to kick off here, guys. But XRP steadily climbing towards $1.30. And when it does, we're going to do the live breakdown on air as well. We already have over 2,100 people here. If you're having fun, smash that like button. I got to say, I love and appreciate you guys. And I love the fact that so many people are interested in the same topics that I am. I'm going to get into this update right here. We got to listen to some ad. I'm not going to listen to the ad actually, but this is Coinbase CEO Brian Armstrong on the Clarity Act and talking about Bitcoin surge as stocks slide at the open. Now, this is the best part about being buying these assets during a bear market is that watch how the masses come in. Watch how the people in your personal life who know you own crypto start to approach you, start to say, is it too late to buy? Start to re-engage in these conversations. I've seen it twice before. We're going to see it a third time here. And it's so great because I think we're at the bottom of this bear market. But listen to the brand new clip. Here it is.
Downside move at the opening. Futures indicates a downside move at the opening bell. The Dow's off about 400 at this point, and the Nasdaq's down about 150. Plenty of red ink. Check on Bitcoin, please. I'm looking at 71.8 at the moment. Coinbase Chief Executive Brian Armstrong is with us this morning. Bitcoin 71.8 as of right now. Is that because the market senses that the Clarity Act is going to pass?
Yeah, I think that's right. And thanks for having me on the show. So there's a big Senate vote coming up on September 15th. Leader Thune was good enough to go and schedule that. So we now have a very clear date when the Senate's going to vote on the Clarity Act. And it's been a strong bipartisan compromise, which leads me to believe that it's going to get far more than 60 votes. And the administration just yesterday, we had this meeting with the president and the top regulators at the SEC and CFTC. And that was the big topic of conversation is there was a big sense of urgency from this administration. Let's get clarity done. Let's get it over the line. So both of those things I think are contributing to this Bitcoin price bump. And I personally believe we're at the beginning of the next crypto bull run.
Okay. There is some opposition to the Clarity Act, especially from the banks. Why do the banks oppose it?
So I would be careful not to paint with too broad of a brush there. There's actually a number of banks who've come out and endorsed the Clarity Act. Goldman Sachs, Citi, BNY, and other financial services firms, by the way, too, like Fidelity and BlackRock have all come out and endorsed it. So I think the bill is actually very good for banks. Most banks.
And guys, I told you I was going to break it down. XRP just passed $1.30 on the XRP price chart. And I found a great update, which is very, very interesting. Check out this data here. XRP just wiped out 2.5 months of downward price action in less than 48 hours. That is a clear example of how crypto moves unlike any other capital market on the planet. It's not hopium. It's not BS. It's the truth. When crypto starts to move, it moves unlike any other asset class on planet Earth. And Nucci, shout out to a fellow Paisan. Listen, that's what Johnny would say. I'm not Italian, but I get that very often. He said, XRP, pump it up on YouTube's. Abs and Johnny, great job every day. Been here watching you daily for 2 years now. No skips, never waver. Thank you so much, man. People like you, very, very important. You are what make the community so great. It's not me sitting here on screen. It's the great people who engage in chat every day. So thank you so much, Nucci. And I'm sure there's dozens of other people who feel the same way. So thank you so much. Let's get back into this interview, and then we'll talk a little XRPTA as we are less than 5 minutes away from this CFTC event kicking off. Here's what Brian had to say earlier.
Recognize that it gives them new powers that allow them to grow their business and with this new technology, which is great. There's still a few holdout banks, I would say, that are against it. And the reason is plain and simple. They don't want competition from crypto companies. They don't want to have to pay higher rates to their customers. And, you know, competition is what made America great, right? Free market competition, that's what is the ultimate consumer protection that creates better outcomes for everybody. So obviously, folks in the Senate are not going to stand for that. You know, people don't want protectionist behavior from a small group of incumbents. And so I think most of the banks have realized at this point, this is an opportunity. It's not a threat. And we've got to get these clear rules so this industry can be built here in America.
Trump set out to make America the crypto capital of the world. Has he done it? Is America the crypto capital?
Yeah, actually, I mean, you've got to give the president a lot of credit. On the campaign trail in 2024, I think he very astutely recognized that there was millions of voters in the U.S. who felt disenfranchised by the prior administration around crypto. They felt attacked unlawfully, right? And so he made a promise to make America the crypto capital of the world. And within weeks of taking office, he made good on that promise. He drafted an executive order asking the agencies in his administration to go further this agenda. He appointed two of the most crypto-friendly and competent regulators anywhere in the world, Chair Atkins and Chair Selig at the two top regulator agencies. And then he got the Genius Act passed. He created a strategic Bitcoin reserve. So it's all been incredible. And to really make all those changes and progress that this administration has made durable into the future, we can't just have regulation. That's not enough. We need legislation. That's where the Clarity Act comes in. And it's going to make sure that someone in the future can't, in a new administration, can't change the rules again. It's going to make this progress durable for decades to come.
I've got 20 seconds left. Would you forecast $100,000 Bitcoin by the end of this year?
I think there's a good chance. I don't know exactly what, I think over the next couple years, if I say 2030, I think it's very likely we'll see a $300,000 and $400,000 Bitcoin, and we'll see how it goes.
There's a headline for you.
So that's how quickly the tides can turn, guys. We get 2 days, 48 hours of some positive price action, and we're already talking about brand new all-time highs for Bitcoin and things of that nature. Now, look at what's happening on the XRP price chart, guys. We blew through $1.30 here, already up to $1.31 on the XRP price chart. Now, the price that I'm keeping an eye on, like I said about 5 minutes ago, $1.32. If we pass $1.32 with volume, we could be talking about some even more exciting price targets later on during this episode. And this is what I love so much about the cryptocurrency market. When this thing starts moving, it moves unlike anything else. This is like a Ferrari with jet engines attached to the back. Nothing in the market moves like the XRP price chart. And I think we're seeing a clear example of that this morning. Now, if we look at the market more broadly across the board here, everything is actually performing very well. Now, XRP up 30% in the last 7 days, up over 22% in just the last 24 hours. But assets like Bitcoin are also performing extremely well. Bitcoin trading at 72,700, Ethereum is 2,300, XRP $1.30. We got Solana up 16% on the 7-day, up 7% on the 24-hour, trading at about $87. And the question that I know the conspiracy people are asking in chat, did Brad stay silent yesterday because he knew what was coming today? One's in chat for yes, two's in chat for no. We're going to break down some more content, but this video is officially kicked off. The advisory committee's meeting, it is live. We're looking at the screen that they're leaving here until the event actually starts. So stick around. We're going to be watching the live CFTC meeting, which kicks off in about 3 minutes. Very, very excited to kind of talk about that with you guys. Now, while we're waiting for that meeting to kick off, I do want to talk about some other important topics that I do have prepared, which is this tweet right here, the White House Crypto Summit recap, 5 bullet points everybody needs to be aware of. Number 1, President Trump says the U.S. considers buying sizable amounts of Bitcoin and other digital assets. Now, remember this, when they're talking about buying other crypto assets, Ripple met with Howard Lutnick yesterday. That's a conversation I want to come back to. Number 2, Trump calls on Congress to pass the Clarity Act. Number 3, Trump says the U.S. is ensuring it remains the undisputed leader in crypto. Number 4, Hyperliquid, the hype token, pumped 15% to nearly $70 after Trump says the CFTC is working to bring it into the United States. Number 5, SEC Chair Paul Atkins says we will...
Ladies and gentlemen, the meeting will begin shortly. If you could find your seats, we'd be grateful. Thank you.
It's kicking off, guys. It is kicking off. So there you go. I don't want to kind of talk over what's about to take place here, but if you're enjoying this content, you're having fun, smash that like button. It's one of the easiest ways to help out the program. And we are spontaneously about to go live here for several hours. I was planning on a normal stream. The chat demanded it, and here we are. And because of the positive price action and the exciting meeting, I'm more than happy to stick around for today's episode. Now, XRP is actively climbing very quickly towards $1.32, guys. I want to hear 1's in chat if you think we break through that. 2's in chat if you think that's going to be a key range of resistance. It's a make or break price, and I'm excited to kind of watch it unfold here. I'm just waiting for this. I don't want to talk over the meeting. That's the one thing I'm a little hesitant about as we're waiting for this thing to play. While we're getting into it, let's play a couple of short clips here. Here's one talking about how the winners and losers have already been chosen. Maybe we're going to get a more insight into that after the CFTC meeting today. Here it is.
The ledger is making the shift from kind of a payments network to more of a stablecoin transaction network. And then the DTCC, they announced that they're working with a lot of different blockchains just because it's so big. And, they actually announced they were working with Stellar, right? And so, again, I think it's kind of already in that the winners have clearly been established. And so I think like there's some clear losers that have been established. Cardano launched.
Cardano catching strays there.
It was supposed to be this competitor to Ethereum, and it's not really, no disrespect. I'm sure a lot of effort went into building it, right? But like it hasn't captured share. There's not really much going on. And so I think that shift's already. The ledger is making.
So you heard it right there. He said that shift is already happening. And this guy, this is probably the funniest comment in chat today. Photographer commented, Abs, you talked over the president of the United States yesterday. Who are you kidding? Well, listen, I didn't mean to, my friend. I just talk a lot. That's a problem I got. But I've turned it into my greatest superpower because I got this.
Everyone.
Oh, here we go.
Welcome to the inaugural meeting of the CFTC's Innovation Advisory Committee. I am Michael Pasalacqua and have the privilege of serving as the designated federal officer in addition to leading the agency's innovation task force. I officially call the meeting to order. The caliber of people joining us in the room reflects Chairman Selig's commitment to bringing the very best minds to the table. And we are grateful for the viewpoints each of you will bring to the meeting today. We are also fortunate to have a committee chair who brings a unique perspective to the position, previously as acting chair of this agency and continuing to serve our nation's markets at the highest level. With that, it is my pleasure to introduce Chairman of the Innovation Advisory Committee, Walt Lucan, for his opening remarks.
Well, thank you, Michael. I have to admit,
who is Hayden Adams here? Is this intentional? I'm not sure what's going on.
Feels pretty good to be at the front dais of the CFTC again after all these years. So this is a pleasure. And I recognize Scott O'Malley, a former commissioner as well in the audience. But thank you, Michael, and welcome to the inaugural meeting of the Innovation Advisory Committee. And thank you to Chairman Selig for entrusting me with this role, as well as I commend him for his leadership in advancing the innovation agenda of our industry. And obviously, thank you to Michael and the CFTC staff for putting all of this together. Now, looking around the room, it's clear that the innovation agenda of our industry is alive and well, whether it's traditional derivatives markets or new asset classes like prediction markets and crypto. I think when it comes to innovation, we can all agree that we must stop distinguishing between traditional and new market types. Everyone in this room fiercely competes and innovates. And it's this entrepreneurial DNA that has driven growth and progress in our industry for over 50 years and will continue to drive innovation in the years ahead. Now, we're in a period of extraordinary growth and expansion in our industry. In 2003, there were 16 designated contract markets regulated by the CFTC. Today, there are 30 designated contract markets with 17 pending approval. In 2023, there were 2,100 traded contracts regulated by the CFTC. Today, there are 6,700, triple the number. Now, I believe that the Commodity Exchange Act, the operating system of our industry, is one of the main reasons for this burst of activity. Since the enactment of the Commodity Futures Modernization Act of 2000, Congress has charged this agency with promoting responsible innovation and fair competition. Lawmakers provided the CFTC with flexible tools to effectuate this mandate, from principles-based regulation to self-certification to exemptive authority. Importantly, Congress included the terms fair and responsible in the CFTC's mission to ensure these public goals did not come at the expense of the safety and soundness of the markets or the protection of customers. Now, we are here today not to advocate for one technology, business model, or market participant. We're here to provide practical advice to the Commission that is rooted in real-world experiences. Good policy is informed policy, and informed policy comes from listening to the people who operate, use, and build these markets every day. Now, that's all of you. So my job as chair is to keep us on time and on topic, and I apologize in advance if in that role it requires me to cut off participants. I only take a small amount of pleasure in doing so. So I commend Chairman Seelig for hosting this timely and relevant gathering, and I'll turn it over to him for his opening remarks.
Thank you, Walt, and good afternoon, everyone, and welcome to the inaugural meeting of the Innovation Advisory Committee. Just following our fantastic meeting yesterday at the White House with the president, he kicked us off, and we're all so grateful for his leadership. You know, he took us back to the Oval after the meeting, and he asked me, which is the more powerful agency? Is it the SEC or the CFTC? And I don't know, looking around at you all in this room and everything that you've built and our very broad definition of commodity, I told him it might be the CFTC these days, but no, I'm just kidding. But we're really glad to get to work with Chairman Atkins, of course, at the SEC. And I think combined, our strength is really quite voluminous. So we've assembled some of the world's greatest builders, thinkers, and entrepreneurs here in our nation's capital to engage in a series of conversations about where our financial markets are headed and what role America, in particular, this agency, the Commodity Futures Trading Commission, or CFTC, will play in shaping that future. And before we get started, I'd like to take a step back and discuss why American leadership on this new frontier of finance is so important. But before I do, I must provide the standard disclaimer. The views I express today are my own as chairman and don't necessarily reflect those of the commission. For more than half a century, the CFTC has stood at the center of innovation in America's financial markets, helping ensure that innovation can flourish while markets remain fair and resilient. When President Gerald Ford signed the Commodity Futures Trading Commission Act into law in 1974, America's derivatives markets were being transformed by an explosion of interest in a wide range of novel instruments, from contracts on currencies to petroleum allocations to Ginnie Mae certificates. Despite federally regulated commodity exchanges having existed since the 20s, prior law only covered contracts on enumerated commodities like wheat, corn, cotton, and rice. The balance of contracts were subject to the same patchwork of state laws that had prompted Congress to institute federal commodity laws in the first place. As a result, America was falling behind. The history of America's earliest commodity exchange, the Chicago Board of Trade, has been described as a saga of, quote, fending off countless politicians on both the state and national level, all of which seemed intent on shutting the board down, end quote. In 1848, a group of merchants established the board above a flour store to enforce a set of codes and rules for buying, weighing, and grading commodities and to arbitrate disputes among traders. By 1859, a convention emerged whereby parties who had committed to buy or sell a commodity could make or receive a payment to or from the other party based on the change in price of the commodity, instead of making or taking physical delivery. They standardized a promise, a measure of grain, a price, a date, so that a farmer hundreds of miles away could lock in her season before the first frost, and so that a miller could plan his year without relying solely on hope to make ends meet. These arrangements came to be known as futures contracts. The response to this innovation in the markets was remarkably similar to what we've seen today with some of the innovation in our markets. As these early markets began to take shape, state lawmakers across the country moved to subject these exchanges to a wide range of state anti-gaming and anti-bucket shop laws. One lawmaker urged federal action, exclaiming that, quote, the grain gamblers have made the exchange building in Chicago the world's greatest gambling house. Karl Marx himself called exchanges, quote, gambling parlors where little fish are swallowed by the sharks, end quote. The same rhetoric has been used to delegitimize and undermine our markets for more than a century. But when lawmakers considered legislation to amend the Commodity Exchange Act, or the CEA, and codify once and for all a comprehensive federal regulatory framework for commodity exchanges, they recognized then what we know to be true today. Regulation and innovation must go hand in hand. Without clear rules of the road, builders, visionaries, and entrepreneurs always leave for brighter shores. So Congress established a federal system of market regulation designed to be future-proof and created a new federal agency, the CFTC, and provided it with exclusive jurisdiction over commodity derivatives markets. Lawmakers also included a statutory mandate that the agency promote responsible innovation. Recognizing that virtually anything, tangible or intangible, might serve as the underlying for a derivative contract, lawmakers defined the term commodity to include all goods and articles and services, rights, and interests that may be the subject of a derivatives contract. This included events, contingencies, and incidents that take place which are beyond the control of the contracting parties. Within an essentially unbounded field of potential commodities, exchanges were free to innovate and offer a wide range of novel financial instruments under a single regulatory framework. The breadth of the definition of commodity makes clear that lawmakers intentionally chose not to fragment regulatory authority over commodity derivatives markets based on the underlying commodity. They reasoned that, quote, the nature of the underlying commodity is not an adequate basis to divide regulatory authority. Instead, lawmakers opted for simplicity and ease of administration, explaining that the fact that a futures contract market does not fit into the traditional mold, where there are both hedging and price discovery functions, should not be the determining factor in whether a contract is regulated by the CFTC. These contracts were now required to trade on CFTC-registered exchanges, known as designated contract markets, or DCMs. DCMs would be overseen by the CFTC, but also operate as self-regulatory organizations that would serve as the first line of defense in policing rules to protect market integrity. This patchwork of state laws that once undermined the ability of exchanges to operate around the country would no longer apply to these federally regulated exchanges. With clear rules of the road, pioneering exchange operators set out into the vast frontier of finance and designed many of the contracts that are popularly traded today, like weather, interest rate, and equity derivatives. After observing the evolution of these markets under the CFTC's supervision for some decades, Congress made additional modifications to the CEA to further future-proof the framework with the Commodity Futures Modernization Act of 2000, or the CFMA, We're pleased to have with us today former acting chairman Walt Lucan, who was heavily involved in the development of the legislation as an advisor to then Senate Agriculture Committee Chairman Richard Lugar. The CFMA replaced the CEA's legacy system of prescriptive regulation with a principles-based regulatory framework. The regime afforded market participants the flexibility to operate within core principles so that their ability to innovate was not constrained by hard rules. More recently, Congress again amended the CEA under the Dodd-Frank Act to expand the agency's authority to more comprehensively cover the universe of swaps. Lawmakers also chose to include within the CFTC's jurisdiction offerings of commodity transactions on a margin, leveraged, or financed basis to retail participants, which must trade as a DCM as futures. The results of these developments are reflected by the sheer size and depth of our derivatives market. At the time the Commodity Futures Trading Act was signed into law in 1974, the U.S. derivatives market was valued in the low hundreds of billions of dollars notional. Today, the CFTC regulates approximately half of the 1.2 quadrillion notional derivatives market globally. This is not an accident. It's the result of American regulation keeping pace with American innovation. But unfortunately, our history reflects that at times we've lost our way. Commodity options were prohibited in the US until 1974 due to concerns that the contracts were instrumental in manipulation and destabilizing speculation. And there's been a lot of debate about Congress's decision to ban onion contracts and the Onion Futures Act of 1958, as well as the movie box office revenue contract prohibition that found its way into the 2008 financial crisis reforms. Today, we're once again at an inflection point. Another moment when the choices we make will shape the markets and opportunities of the decades ahead. We've crossed the Rubicon and are standing at a new frontier of finance. It's not a question of whether the innovations like blockchain, artificial intelligence, and prediction markets will transform our markets. It's a question of where this innovation will take place and who will write the rules. America can either accelerate and continue the regulatory tradition that made our markets the greatest on earth, or it can decelerate and let other countries take their lead. We can be optimistic about the future, or we can fear it. In this administration, we are choosing to lead. Under President Trump's leadership, America will not simply participate in the new frontier of finance, we will shape it. Today, I'll preview our innovation agenda, or what I refer to as the roadmap for the new frontier of finance.
Wow, that was huge. They're going to release a roadmap for cryptocurrencies, guys. And I'm not going to talk anymore, but I just wanted to remind you, if you're enjoying this content, smash that like button. It's one of the easiest ways to help out the channel. And if you're new to this show, we go live every day, 11:30 a.m. Eastern time, talking about XRP and crypto updates in general. So I'd encourage you to subscribe. We're breaking this down live, and I'm not going to talk anymore. Here's the clip.
During the prior administration, the American crypto industry weathered a perfect storm of anti-crypto armies, debanking, regulation by enforcement, and offshore exchange failures. After taking the oath of office on January 20th, 2025, President Trump quickly followed through on his commitment to fire Gary Gensler and make the United States the crypto capital of the world. Under the prior regime of regulation by enforcement, businesses couldn't know in advance whether their actions were legal or illegal, whether they were guilty or innocent, because there were no clear rules on the books. Many of you in this room today were victims of.
Not sure what's going on.
Certainty to the marketplace as to which types of crypto assets are securities and which are not. I remain hopeful that Congress will deliver to the president's desk bipartisan crypto asset market structure legislation that codifies this jurisdictional line and establishes statutory core principles for crypto asset spot markets. While we have the tools in the box, if the bill doesn't pass, I want to be crystal clear. The most important step towards future-proofing this industry is passing this bipartisan bill. Passing clarity is the surest way that we can prevent another Gary Gensler from running a rogue campaign of lawfare against the individuals and companies in this room today. I'd urge you all to continue engaging with Capitol Hill to ensure that this bill gets across the finish line, and we stand ready to begin immediately implementing the bill if passed. If clarity continues to stall because of Democrat obstruction, the CFTC will utilize its existing authorities to begin establishing a regime for crypto asset markets. We owe it to the American people to do so, President Trump's promised to deliver a crypto asset market structure, and we will help him deliver on that promise. We will heed President Trump's call to codify a future-proof digital asset market structure that cannot be undone by the crypto haters. To achieve this, I've directed the CFTC staff to begin exploring rules to codify a CFTC market structure for crypto assets using the agency's existing authorities. This could enable current registrants as well as non-registrant crypto exchanges to be designated by the CFTC as a type of DCM known as a crypto asset market and offer crypto asset trading on a leveraged or margin basis subject to purpose-fit rules under the CFTC's regulatory oversight. I've also directed staff to engage with developers of on-chain finance protocols to establish ways in which developers can offer their protocols in a legal and compliant manner in the United States, future-proofing developer protections once and for all. We're going to give Clarity its breathing room for a vote, but if the Democrats cannot support a bipartisan work product which reflects compromises from both sides of the aisle and ultimately send a fair version of the bill to the president's desk, then rest assured, I will direct CFTC staff to move swiftly to propose these rules for the industry. Now, as President Trump has said, America is the country that started the AI race, and America is going to win it. Access to advanced GPU clusters and compute capacity increasingly determines who can compete and who can innovate, and ultimately who can lead. As demand for compute grows, so too does the need for markets capable of efficiently allocating scarce resources and managing risk. If the lessons of history are any guide, well-functioning spot, forward, and derivatives markets emerge in conjunction with demand for scarce and economically significant commodities. Compute is proving to be no different. Transparent markets can transform compute from a costly and unpredictable input into a commodity with reliable price discovery and effective hedging, which will strengthen America's capacity to lead the AI revolution. America's AI Action Plan calls upon the federal agencies to ensure access to large-scale compute for startups and academics by improving the financial market for this ever-critical digital commodity. And we're partnering with the Department of Commerce to get this done. Our first step was to issue a request for comment on compute markets, which we released earlier this week. From there, we'll take stakeholder feedback into consideration and develop a gold standard regulatory framework for these new commodities. Just as American markets helped establish the gold standard for the trading of commodities that power the industrial economy, we will do the same for the commodity that will power the intelligence economy. Today, prediction markets find themselves enduring the same type of assault that state and national politicians plagued the Chicago Board of Trade with for much of its early existence. Although Congress gave the CFTC the exclusive authority to regulate DCMs that offer trading and derivatives, many states seek to nullify federal law and apply state anti-gaming law to DCMs. These state actors are sadly suffering from what the late CFTC chairman Philip McBride Johnson called NFS, or name fixation syndrome. NFS, he explained, quote, is an intellectual malady that causes the listener to hear only the first part of a phrase, such as treasury bond futures, soybean futures, oil futures, sports futures, etc. Without treatment, this can lead the patient to think that the futures should be regulated by the same agency that supervises the name. The consequences, of course, are preposterous, end quote. I'm happy to report that we at the CFTC are not afflicted with NFS. That's why we'll continue to promote responsible innovation and lawful derivatives and defend our exclusive jurisdiction in court. As President Trump said, other countries are after this new form of financial market, and we want to remain at the top. But we'll not only defend our jurisdiction, we'll also exercise it by establishing clear rules of the road for these markets. Despite what some diagnosed with NFS may have you believe, prediction markets aren't new. Our statute expressly classifies as commodities events, contingencies, or incidents that take place which are beyond the control of the contracting parties. Derivatives on these commodities are known as event contracts, and they've traded in our markets for decades. Yet the CFTC never instituted a comprehensive regulatory framework to address the unique policy considerations associated with these products. Instead, prior administrations put their heads in the sand, thinking that the markets would go away, and when they failed, tried to outlaw the products entirely. We witnessed the same story that we did with commodity options and crypto assets unfold with event contracts. Regulators tried to ban them and drove the innovation offshore to places like the Bahamas, and we all know how that story ends. We're not going to take that approach anymore at the CFTC. Here's our roadmap for prediction markets. First, We recently proposed amendments to CFTC Rule 40.11. While every event contract must satisfy the core principles and not be readily susceptible to manipulation, Congress recognized that certain types of event contracts, specifically those involving war, terrorism, assassination, gaming, and illegal activities, raise additional public policy considerations. The CFTC has the discretion to prohibit any such contract when doing so is in the public interest. However, our statute does not define key terms like gaming or involve or establish public interest criteria for us to consider. As a result, contracts are at the risk of rejection based on arbitrary whims of political biases, and DCMs have been left operating in the dark. The prior administration attempted to prohibit event contracts on politics, sports, and cultural events in the name of the public interest, without ever defining what's in the public interest. Under this approach, the public is not the judge of its interests, but instead whoever's in control of the commission. Our proposed amendments to CFTC Rule 40.11 are intended to address these issues by defining key terms and enumerating public interest criteria for commission consideration. Second, we propose the rule to modernize the reporting framework for fully collateralized event contracts. The proposal would establish a durable regulatory framework that provides the commission with the information it needs to oversee these markets while eliminating unnecessary complexity and regulatory burden. Finally, I expect the commission will soon propose a series of amendments to parts 38 and 40 of the CFTC's regulations to modernize the core principles and listing rules governing DCMs that list event contracts and institute consumer protection requirements. We've heard the concerns of the public loud and clear regarding the inadequacy of our existing consumer protection requirements for retail. These amendments would also establish clear expectations for product governance, market design, and incentive programs. We have a lot of work ahead of us at the CFTC, but we're energized by the innovation that's happening in our markets, due in large part to all of you in the room today. You've withstood anti-crypto armies, doomerism, and a whole lot of subpoenas, but you continue to build here in the United States, and that's why you're here today. We're so happy to have you all involved in the Innovation Advisory Committee. We've brought together the people building and innovating here in the United States and ensuring that the new frontier of finance is built right here on American soil. Thank you all for your service, and I'm really looking forward to today's discussions.
Thank you, Chairman Seelig, for your opening remarks. Hopefully the committee is just as enthusiastic as I am concerning the roadmap you laid out. Before diving into session one, I just need to mention a few logistical items. First, for meeting participants attending in person, if you would like to be recognized during a discussion, please change the position of your place card so that it sits vertically on the table, or raise your hand. Please ensure your microphone is on when you speak.
So there is going to be an opportunity for Brad Garlinghouse to speak at this event, guys. One's in chat if you think Brad is going to speak. Two's in chat if you think he's aura farming just like yesterday. But I do want to encourage you guys, if you're having fun, smash that like button. We got over 5,000 people here watching us. I think this is about to get really interesting. Let's play it and I'll stop talking.
The meeting is being simultaneously webcast, and it is important that your microphone is on so that the webcast audience can hear you. If you are attending virtually and you would like to be recognized during a discussion, please use the raise hand feature. When the IAC chair recognizes you, please identify yourself before speaking and signal when you are done speaking. Please unmute your video and microphone before you speak, and remember to mute both your camera and microphone after you speak. If you are disconnected from the meeting for any reason, please close your browser and try opening the link again for today's meeting. If you require further technical assistance, please message me within the chat. Now I'll turn it back to our IAC chair, Walt Lucan, to kick off today's discussion.
All right. Well, thank you, Michael, and thank you, Chairman, for really setting the table for today's discussion. As the Chairman mentioned, we want to start out with the evolving regulatory framework around crypto markets as our first session. We have roughly 50 minutes to do that. That's not a lot of time for all the things we may cover. So as Michael mentioned, be sure to raise your placard if you want to be called on. I'll do that. And make sure your mic is on. And also, if you wouldn't mind, for our folks watching online, if you wouldn't mind introducing yourself, your name and your organization. Obviously, we all know who you are, but for those online, it may be helpful to know what organization you're talking from. So with that, crypto has emerged as a emerging technology into a meaningful part of our financial system globally. However, here in the U.S., as was outlined by the chairman, it's largely been done without a federal regulatory framework at the agency. So the innovators around this room have had to navigate overlapping state requirements, uncertain jurisdictional boundaries, evolving legal interpretations and regulation by enforcement. Today, we want to talk a bit about that legal uncertainty and how that has caused problems with the development of your business. But also, this is an advisory committee. It's meant to give advice to the commission. And so we really want to try to get real world experiences of where the commission can act that will help your businesses. So let's start with an easy question, which is, how has that fragmented legal uncertainty that you've been facing really impacted the development of your business in the United States? And what advice would you give the commission in trying to clarify the legal certainty in this area? I'll open it up to the floor.
It's a softball for Brad, guys. Come on.
Vlad?
I'll kick this off. Thank you, by the way, Chairman Seelig, Mr. Lutkin, Mr. Pasalacqua, for convening this. I think we can all agree that there's a big change in tone from 3 years ago, and also having a regulator taking opinionated stances and actually clarifying where they stand has been super helpful, because in the industry we're tackling all sorts of challenges, and fence sitting from the regulator is not helpful, but you've been just incredibly strong. And I think that gives us confidence to go and grow our businesses and actually help our customers. I think as to your question, one of our beliefs is that all Americans should have equal opportunity to generate wealth and to own crypto assets. It's been a challenge navigating the patchwork of state-by-state regulations, because, most direct way, not all of our products are available to all of our customers. Take staking, for example. If you're in my home state, the great state of California, which gets a lot of things right, you can't stake your crypto assets. They're very difficult about that. And practically what that means is, if you're an individual in the state of California and you want to participate in crypto, you're just economically disadvantaged relative to people in other states. So, if you'll actually, and of course, understand there's risks and protections and all of these things, but by and large, you'll just be worse off economically. And not only that, if you move states, things get a little bit tricky and cause all sorts of headaches, not just for the individual, but also operational burdens for the firms that shouldn't have to deal with that. So, 4 US states actually don't allow customers to stake their crypto assets, participate in the network, earn a return, and they very clearly want that. Stable coins, such as USDC, are available everywhere but Texas. Of course, if it's a payment network and certain states aren't accepted, it just becomes less effective. USDG, the stable coin we partner with Paxos and a few other companies here on, aren't live in New York. And Robinhood Connect, which is a really low cost on-ramp that we have some partners here in the room using, is not live in New York either. So I think just a federal framework, aside from providing us certainty and durability and not, having our customers worry about rules changing every 4 to 8 years, or whether an asset they're going to hold is going to have to be delisted one way or another, preventing their access to it, which I think just puts a cloud of uncertainty over everything, will directly make it so that we don't have to deal with multi-state access issues where some of our products are available in certain states. And I think the customer unfortunately ends up suffering here, more than the broker or the crypto firm in most cases.
Alrighty, guys.
So I'll pause.
I'm going to pause for a moment here because XRP just passed $1.32, and this is the range that we were keeping an eye on. Let's see if this pump continues all the way to $1.35. Now, I want to remind you, somebody asked, why are they putting the name cards vertical? If somebody wants to speak, they'll make their name card from horizontal to vertical. We'll keep an eye on if Brad Garlinghouse does that, so that way we can use that as an indicator. With that being said, let's let the clip play, and massive thank you to everybody who's enjoying this.
But really want to thank you guys for the yeoman's work that you've been putting to clarify all this stuff.
So exclusive jurisdiction of the agency would solve that, that the chairman outlined. That's an attractive feature to businesses like yours. Brian, I saw you had your placard up before you dropped it.
Before it flew off, yes. Yeah, so, we were one of the companies affected by the prior environment, certainly. And, put it mildly, I think it was a disgrace for America, right? You had an industry that was doing its best to follow what laws existed. We couldn't hear any clear feedback from those regulators about point somewhere in the law that you feel like what this is, what we're doing is not allowed. Yet we continually received threats and direction from them to stop and cease certain activity. And when I would go in to meet with them and ask them, can you help us understand where, your theory of the law here, they would say, I'm not going to give you legal advice, talk to your lawyers. And by the way, their head of enforcement would kind of be sitting right there, writing down notes in this meeting where we were, lured in to say, come in to register. And then it turned out we'd get a Wells notice a few weeks later. So yeah, that kind of environment is just not conducive. And it really, a couple of results, things happen from that. I mean, one is that roughly 80% of crypto trading went offshore. I heard someone remark one time that nobody has done more for the economic development of the UAE and the Bahamas than Gary Gensler. So, unintended consequences. There was also, some folks are here from the venture capital space, like Chris Dixon, and he's made the point to me very clearly that they just saw a real dearth of new entrepreneurs coming in to build things and to pitch them, because if you're 22 years old and you have an idea and a dream and you want to co-found some company with your friend, you're much less likely to do it if you think you're going to be sued by the federal government within weeks of launching, and you have to go tell your parents about that, which is not fun. And not to mention, the average venture capitalist doesn't want to write a $5 million check into a startup that they know 4.5 million of that is just going to go to legal bills in the impending lawsuit. So that's why I think it's so important, the approach that this agency and the new regulators, the chair here, has taken. I liked what you said in your opening comments about optimism. I mean, yeah, in America, we should have optimism about the future, and every new change can be viewed as a threat or an opportunity. And I think that's what's made America great, is being optimistic about the future, seeing these things as opportunities to go work through. So thank you for your leadership on that. So yeah, clarity would be an incredible step to getting clear federal oversight, including from the CFTC on this spot market authority. And the 50-state regime really has been that patchwork quilt, so that would struggle. Now, if for some reason, I think clarity has a great chance of passing. It seems like people got 90% of what they want on both sides, and it's good for everyone. But if for some reason it doesn't pass, I commend Chair Seelig and Chair Atkins for just pushing forward with clear rules regardless. And I think that's going to be very important. So there's especially, I'll mention one final thing, which is, especially in the past, it was challenging to get the two agencies to work together. And there are certain products which sit at the intersection of the CFTC and the SEC, things like equity perps or KPI event contracts, like on the earnings of a company or something like that. And it's so great to see the two agencies collaborating now. This whole debate in the US about, is this a commodity or is it security? We operate in other countries like Singapore and the UK and places where there's just one federal regulator, and this question never comes up. And so that territorial nature that happened in the prior administration has completely evaporated, and the collaboration is just just a breath of fresh air. So thank you.
Tyler, did you have a comment?
Yeah, I did. Thank you for having
Mike.
us all. Oh. I did. Oh, there we go. Tyler Winklevoss with Gemini. Thank you, Chairman Selig and Mr. Lucan, for convening this council. It's a great cathartic moment after so many years of lawfare and not being able to actually have a conversation and engage with regulators. I totally agree with what Brian and Vlad have said, and it rings very true to our experience. The having to go to 50 different states for MTLs to get licenses. And if you've seen one state, you've seen one. They're all different. Some say we regulate this. Some say, what are you talking about? We don't regulate it. And some say we only regulate the marketplace and not the custody part. And of course, the custody part is where things can go really wrong. And even engaging a law firm to help you navigate this morass of licensing, it's actually a specialty at law firms. It's so complicated that law firms have to have their own specific practice regarding MTLs. And so it is true that in some states you can stake on Gemini and some you cannot. And every state is different versus the rest of the world is much more unified. And when people talk about crypto trading or Bitcoin trading and the volume in it, the volume in Asia is so big versus the volume in America. Most of that volume is perpetual swaps or perpetual futures rather. And we haven't been able to bring them into America. And so we've been competing in the US. When you do the right thing, you're competing with folks around the globe that are allowed to move at the speed of innovation, offer products that we can't offer here. And it feels like you're running with lead shoes on and a parachute. So it's incredible to finally be able to have a conversation of how we can bring in these amazing products into the US and offer this innovation and this competition and all this value to customers here. I think that's great for America, that's great for consumers, that's great for American businesses. So it's just great to finally be able to be playing on a level playing field. And just quickly, so much of the innovation has been stifled. Why would you come into crypto just to get sued when you can go to these exciting other industries like AI? We know historically the best companies in America came out of garages and dorm rooms. They didn't come out of the conference rooms of law firms. And so we need to change that. And we're finally doing that. And I think that we need to be committed to helping pass clarity. But if that can't happen, we can't delay forever. We need to pass rules and rulemaking. That's going to happen anyway. You need rulemaking. If you pass clarity, you're going to have rules if you don't pass clarity. And the question is, are we going to write rules now during this administration with these chairs, Chairman Selig and Chairman Atkins, or are we going to let these rules be written by someone else, potentially a Gary Gensler 2.0? And so it's important that we get going. Chairman Atkins showed us the way with reg crypto assets just the other day and helping projects raise capital with the proper disclosures. And all of a sudden, we just may see a Cambrian explosion of innovation when it is clear to an engineer in a college dorm room how they can actually raise money for their project. Right now, it's not clear, but what is clear is you have to hire a lot of lawyers, spend a lot of money. Why would you bother with that brain damage that we all lived for the last decade when you can just go to AI or some other industry? So thanks again for having us.
All right, well, we have, thank you, Tyler, and we have a few placards up. So I'm gonna go with Raghu first, and then I think Mike, Brad, Don, and Arjun.
Boom, Brad's
So
gonna
I'll go
say
in that
something.
order.
There we go.
Oh.
Sounds good. This is Raghu Yarlagada from Falcon X. First of all, thanks so much for hosting. It is really refreshing to see innovation coming from crypto being recognized by this forum. For years, we've been ducking behind rocks, so it is. I'm very thankful that the innovation is being recognized. Now, specific to the fragmentation when it comes to regulation, I'll start with a little bit of a context on where my question or suggestion is coming from. I'm an engineer, so what I chase is, what is the use case, what are customers asking, and how can I build for that very fast? The world fundamentally changed in the last 12 months. Q4, the entire world was after gold. Q1, the entire world was after oil. And Q2, the entire world seems to be behind equities. And you see that explosion within real world assets on chain. Now, as an engineer trying to build for that, we were the first digital asset CFTC swap dealer. And it was an incredible experience working with CFTC over the last 3 years, refining and providing swaps to the US market and making it safer in the context of digital assets. Now, when I'm trying to build a platform that has every single asset, not just crypto, not just commodities, but securities, prediction markets, and everything in one single fabric, at the federal level, while we made tremendous amount of progress over the last 1 year in terms of bringing both agencies together, I think we can perhaps do more. If I have a CFTC actually think through that and consider how to bring
Phil McBride Johnson, who was the Shad Johnson Accord, the first harmonization effort between the agencies. Maybe there'll be a Atkins-Selig arrangement soon. I don't know. But anyway, Mike, let's go to you. And I see Hayden's online too. We're gonna. I didn't see him earlier, but we'll go after Mike to Hayden online.
All right. Hello, Mike Belshi, BitGo. First off, like everybody else, thank you for having this. It is a delightful change from the previous administration that wanted to do the opposite. In terms of what's happened, I mean, I think we've all seen, we talk about, MTLs, state by state, all of these things are hurdles. It really comes down to a more fundamental problem, which is just speed. Business moves at speed. It has to move at speed. AI is going to make it move at even more speed, which unfortunately probably makes this entire discussion even harder as we think about what comes in the coming years. We've heard a little bit about regulation by enforcement. And what is that? That's where you tried something and then instead of having a regulator say like, all right, that didn't work, we don't like it, we'd like you to change it this way or guide, instead you get slapped with something criminal or something severe civil penalties or whatnot. So I think the most important thing is how do you facilitate speed, making decisions. I think I speak certainly for everybody here, we are perfectly happy to work with the regulators on whatever it is we have to work through. We just don't want the regulation by enforcement. It holds everything back. So quick decision-making, I think, is probably really an underpinning to this. And then I also heard in the opening remarks, principle-based regulation, CFTC has a bit of this. I think it's such a better model. As we look forward, trying to define rules today for whatever is going to come tomorrow is going to be tricky. So continuing on the principle-based, I think, is a stronger path.
Brad,
Hayden, if you could unmute.
Hi, can you hear me?
Oh, this is the Hayden guy. Here we go.
All right, thank you. So I'm Hayden. I'm the founder of Uniswap. We pioneered automated market making, which improves market efficiency and lowers the barrier to creating and participating in markets. I really want to start by thanking Chair Selig and the CFTC leadership. As a builder in the crypto space, the difference for us with this innovation approach is really night and day. And that's what I most wanted to speak to here is, what crypto startups in the US went through. And, from the beginning, we always aim to be a good actor and follow all laws and regulations where no proactive guidance was given. And, for that, I'd say that we had, me and my company and multiple of my employees were debanked. The company received a Wells notice from the SEC after a 4-year investigation. We had a CFTC investigation resulting in a no admit, no deny settlement. We had state regulators pile on to federal investigations and kind of bring, copy pastes of those lawsuits or investigate, or at least investigate. We had the regulatory vacuum that was created also led to, class action lawsuits that were basically, recreations of the same SEC claims. On top of that, I want to kind of, throughout all of this, we were a 100-person startup. And so I think most startups cannot survive that. So we survived that, but I think that we're more likely an exception to the rule. And it was because of just like the massive adoption and usage of Uniswap and some of the resources that gave us. But for us, it like really held us back. And I have, many personal friends who shut down their companies during that same period of time because their companies could not weather it. I also had many personal friends who were crypto founders leave the United States to build their companies outside of the US as US citizens because they didn't want to go through what we were going through. And I will say that the ones that left the US also were the ones that didn't get sued, and they were able to build faster and not have the same concerns. We were able to kind of survive, but our competitors were able to move faster, were able to build things that we were not. They were able to kind of, be a lot more aggressive in terms of their growth. I stayed in the US throughout it, despite, very frequently being recommended to leave the US because I believe in kind of the promise of this country. I believe in the value of what we're doing, and, that it can be good for that what we're building is good for the world, and that ultimately, working through this within the country that I live is the right way to approach it. But I will say that that was against a lot of recommendation. And I think that a lot of people that left the US also didn't regret it and had a lot less legal issues to deal with. I think that how do we go from here? I think that we've all been saying that we really appreciate this new approach, and it is night and day for us. I think that what we have to think about now is how to kind of retain these benefits into the future, right? Which is, the current, the political kind of tides can shift and turn very quickly, as we've seen in this very positive way. And so, what we have to think about is, if we really hope that clarity passes, obviously, and that's kind of, really important for builders in the US. And if it doesn't pass, then I think that the next best approach is kind of working with regulators to create as much proactive guidance during this pro-innovation period as we can to kind of help create a longer term certainty and clarity there. So, that's mostly what I wanted to speak to. Happy to kind of speak to anything else, but really just, we need clarity, and if we don't get clarity, we need, proactive regulations. I'll also kind of mention that, even in this kind of window of very minimal regulations, we did our best to interpret and kind of do the job that ultimately was meant to be regulators, but that process itself is very expensive. You have to hire lawyers to kind of redefine from first principles how to approach every single product that you build. And so we really hope to, be a partner in creating proactive rules that can help, have others not have to go through what we went through. So thank you.
Yeah. Well, thank you, Hayden. One of the promises of crypto is not just the asset class that sits on top of the blockchain, but the technology that underlies it. And blockchain and tokenization that we're seeing a lot of the institutions that have long been in our markets utilizing that technology. I do want to bring them into the conversation a bit more too, because in many ways, that's the most exciting part of the market structure dialogue. Not necessarily the new asset class, which is exciting, but the technologies that's going to revolutionize how markets work across the board. So, Brad, I want to go to you next, and then I think we have Don after that.
Here we go.
Oh, there it goes. Sorry. Well, I was going back to the first question. Thank you, by the way, for hosting all of us. It's an honor to be here. I'm Brad Garlinghouse, the CEO of Ripple. As many of you know, Ripple had the unfortunate reality of being at the center of the bullseye of the SEC's lawfare in the previous administration. And suffice it to say, my headline for today is "What a Difference Leadership Makes." I think it's profound, as you've heard from several people here, how significant that shift has been. You asked for some examples. I think it was Brian that referenced that you didn't want to invest $5 million and have $4 million go to legal bills. Ripple spent $150 million in outside legal counsel during our 4-year battle with the SEC. Most companies would not have, and frankly, other companies were bullied into submission prior to the lawsuit with Ripple. Suffice it to say, from my point of view, and I think everyone here would probably agree, the status quo is not good enough for consumers or for innovation. I think it's absolutely imperative we have these clear rules of the road, both to protect users, but also hold companies accountable and give responsible businesses the certainty to build here in America. You asked for examples. 80% of Ripple's hiring for those 4 years was non-US. Even today, our second largest office is London, because of that legacy that has shifted under the leadership of this president and this administration, the CFTC and SEC. I think we all can agree that the technologies represented at the tables here can make moving money faster, more efficient, and more accessible. But we have to have clarity to unlock that potential responsibly. So thank you for your leadership, and thank you everyone for being here today to help achieve that.
All righty, guys, we heard from Brad.
Thank you, Brad. Don.
Chairman Selig, thank you very much for putting this together. This is very exciting. I'm Don Wilson, the founder and CEO of DRW and also our crypto arm Cumberland. I'm pretty sure I can say that I have the honor to be the only one who was sued by Gary Densor twice, once when he was running the CFTC and once when he was running the SEC. Much better environment now, so thank you. I wanted to follow up on a comment that Tyler made about perpetual futures contracts. My view is that perpetual futures contracts are a very useful risk management tool. And I think that, for instance, ETFs like USO would benefit from using perpetual futures contracts in addition to quarterly futures contracts in their, as part of their investing vehicle. Just because it is a perpetual futures contract does not mean it needs to have 100 times leverage, does not mean it needs to have auto deleveraging. Those are all features that were put in place on offshore platforms. I don't think that we should adopt those. I've been quite clear about that. And Kalshi has, launched Bitcoin futures. I think they have like 5-to-1 leverage or something. It's entirely reasonable. I also think it's important that we regulate these, to your NFS comment, we regulate perpetual futures contracts as futures contract and not as swaps. If we categorize them as swaps, they're just going to remain offshore. We will not be able to benefit from the risk management tools that these can serve if we bring them onshore into a safe and regulated environment. So I encourage you to do that, and I encourage you to approve perpetual futures contracts on a wide range of products, including single name equity, et cetera. I think that there's a lot of benefit to that. On the underlying technology of blockchains and what they bring to the table, we're very excited about that innovation that's taking place there. We've been working closely with the DTCC and their progression towards launching in October on top of Bezu and Canton. But we do need some additional regulatory clarity that's probably not going to be covered in clarity. It is more of a just clarity from the commission. For instance, we're moving to 24/7 trading. We obviously need to facilitate 24/7 collateral movement. Forcing market participants to over-collateralize for weekends is not beneficial. I think that the CFTC has an opportunity to encourage harmonized margin cycles during weekends. It's also important that FCMs have clarity on whether they can self-custody customer seg funds in tokenized forms, and if so, are they subject to any constraints? These are real concerns that people have, that need to be clarified, not 6 months from now, but kind of now, because we're already racing down this path. So, but yeah, again, thank you for putting this together, and great to be here.
Thank you, Don. We support a lot of that technology movements too on trying to get 24/7 movement on collateral. So that's a great idea. Arjun.
Well, thank you for having us here and bringing us from sunny California to Washington, D.C. The weather is much better here. I think everyone will say enforcement is bad, clarity is good, but I don't think anyone would really argue with that. So I think you'll hear that as a recurring theme. But I think it's worth pricing it in terms of what we did and how we structured our business alongside other people's stories. So in 2021, we paid $30 million to the SEC. So, and we basically shut down staking for about 2 years. We had it outside the United States. We also grew outside the United States, and we essentially, continue to invest outside the United States. 2/3 of our team for Kraken today is outside the United States. Then we ended up to come onshore. We spent roughly $2 billion to acquire licenses. Don't make fun of us, but we have 2 DCMs, 1 DCO, and 2 FCMs. If you think about like market access premium of what we pay here in the United States versus anywhere else in the world is roughly 50 times larger versus what the build cost looks like. So that is just a huge disparity on what you see any innovator, any entrepreneur, any engineer building outside the United States. We're almost as cool as like the healthcare industry. And so I think that's, it's a little bit of an embarrassment. The other one I think is like I laugh when I read Twitter, of course, because I think of it as a source of truth many times, is that we are the last of the G20 members without a market structure framework. Russia passed it a couple weeks ago. So we are comparing ourselves to every other country in the world where they've moved forward. MiCA passed in 2023, and it's already fully live, and it is a basic framework that has worked out pretty well for what I call good actors. The thing that I think people won't name here is that a lot of innovation is outside the United States, but it's also harmful to US customers because you can get access to some of these products in an unregulated way. So, without naming the names of these exchanges, they still act in a nefarious way. They have leverage. They have ADL, processes and systems that hurt not just US customers, but customers worldwide. I think, and Tyler mentioned this as well, I don't think that legislation and rulemaking, it has to be one versus the other. We can do both. And so my sincere advice and suggestion would be to just do it. I mean, you have a lot of recommendations here on what that looks like. Clarity is the framework, right? The perimeter of what we're trying to do. Rulemaking and guidance is gonna come from the CFTC and the SEC, and there's no reason to wait. And the longer we wait, it's more likely than not we won't see anything in the future. We'll kind of be back here again. And my hope is that companies like ours aren't spending another $2, $3, $4, $5 billion just in the licensing stack. Similar to Brad's comment about Ripple, we spend today over $150 million a year just in legal fees. I love lawyers; they're my friends. I've known them for a long time. But at some point, I'm not looking to enrich them.
Strong statement there.
Thank you, Arjun. Well, we have about 10 minutes left in the session and about 10 placards up. So I'm trying to do this in order. So I see everybody's placards that are up, but I think I had Peter first, Joe, and then Frank. But if we can just try to keep it concise so we can try to get as many comments in as possible. We may go a little bit long. Yeah.
Thank you. Peter Smith, blockchain.com. So I've been doing crypto for like 13 years and definitely really appreciate being here. Sort of the chance to speak openly with the commission and help shape the future of US policy. I always thought of Gary Gensler as like the best salesperson and BD guy for the legal industry, less than the Bahamas, but everybody has it a little different. One of the things that I wanted to bring up, very kind of short point, is we do most of our business outside the United States, and our largest office is in London. So we've been really at the forefront of the MiCA rollout, as well as how MiCA was written. And one of the things that we've learned from that is that harmonization is great, particularly for large companies like ourselves and many of this in the room. It can also be very bad for startups. And even though this is kind of against our own interests, one of the things that we tell regulators globally is that you don't want to make some of the mistakes that we made in Europe with MiCA, which is that it made it very hard for small companies and startups to compete. So as MiCA has come into full force this year, you've seen thousands of digital asset companies unable to be regulated and basically have to wind up business. And so one of the things that I push for a lot in meetings with regulators is sandboxes, so that small players can continue to be part of the market, so we can have startups, so we can have innovation. And that brings me to my second point, which is, as Mike said, we need to move at the speed that companies and business can now move, which with LLM tools and AI is incredibly fast. So I think a lot of activity needs to have some kind of safe harbor limit based on the amount of, business metrics, so you can move faster as a business and remain competitive globally. And with that, I'll just say thank you again.
Thanks, Joe. I'm sorry. Thanks, Peter. We go turning to Joe.
Thank you. So I wanted to go on record just supporting a bunch of the stories of my colleagues who, like us, spent millions of dollars and were thwarted in our attempts to innovate for a number of years. It really drained a lot of the energy out of the American aspects of our ecosystem. And so I wanted to thank Project Krypto, CFTC, SEC for your open dialogue approach, your approach to clear rulemaking versus the previous administrations. It has been incredibly invigorating for our company. We are energetically innovating, and we're shipping code incredibly quickly, faster than we ever have. The collaborative approach between the two agencies is, I think, going to be extremely important, and collaboration with innovators. Programmable money, programmable finance is a new kind of construct, new kinds of primitives. And DeFi is going to have some sort of uncertainty principles behind it, where you look at it a certain way, it's a security, look at it another way, it's a commodity, and we're going to have to figure out collaboratively this sort of blurry, at times, new set of primitives in finance. And there are cracks in our ecosystem between protocols, and those cracks present dangers. Those are dangers where security issues can emerge, and so we're going to have to take a very holistic approach to understanding and regulating decentralized finance. Harmonization may be necessary to address new kinds of constructs. Vaults in particular are going to be a very interesting topic for us all to look at together. I anticipate that vaults, which are essentially smart contracts that can serve as containers and mechanism around different kinds of financial instruments, they'll have securities characteristics, they'll have commodities and derivatives characteristics. And I think we're going to need a first principles approach because securities laws were designed to protect consumers and other holders of financial instruments against the people who might not be fully aligned with the best interests of the investor. Smart contracts, on the other hand, are going to be very transparent. You're going to be able to explicitly, programmatically disclose the strategy that is being followed. And you're going to be able to set things up so that the custody remains with the investor, even while the capital is deployed in a strategy. So once again, thank you so much for your work.
Thank you, Joe. Just to throw another thing into the mix here too, part of our obsession at trade associations is also operational resilience and cybersecurity. If any of you might want to address, whether the crypto technological revolution is going to help with that. Operational resilience. I know there's a lot of discussions around mythos and what that might mean for our industry, but we'd love any advice on whether the CFTC needs additional guidance in that area would also be helpful. But let me turn to Frank from DTCC, who's been doing a lot of work on tokenization.
I think he messed up his microphone here, guys.
Thank you.
There we go.
Thanks. Yes, I'm Frank LaSala, CEO of the Depository Trust and Clearing Corporation. Mr. Chairman, thank you for having us. It's really great. I think this was a fantastic idea. Walt, thank you for volunteering to be the parental supervision in the room. Keep us all in check. You're doing a good job so far. Nice work. So, you know, Mr. Chairman, what I wanted to say is I'm going to come at this from a slightly different perspective. I think all of us could attest to the fact that whether it's AI or blockchain, crypto, financial markets are transforming at a rate that none of us could have imagined not too long ago. And I think I've heard around this table, it's going to move with us or it's going to move around us. So having something like this is really important. One of the things that strikes me as I listen to what everybody said and I look around the room is you've got an incredible ability to bring people together. Like this idea of just bringing teams like this together. We got a taste of it when you were at the SEC and you brought together the crypto task force. And what that allowed firms like ours to do, it gave us an open lane to have a dialogue. And even though we had lack of regulatory clarity, it gave us enough confidence to move ahead with things that we knew needed to be done to stay ahead or at least stay with the innovation that was coming in front of us. That's incredible. This ability to convene, I would not underestimate. I look around this room, you clearly have that power to convene. So as we walk through this path of not knowing what legislation is going to come at us, what might come, what bits might fall off, I think I would encourage you to continue to convene, maybe not in large groups like this, but open up those lanes, because when we as an industry have that interaction with staff and getting a sense of where the chairman is on things, that gives us a lot more confidence to move ahead that we otherwise wouldn't. So if I can leave you with any piece of advice, that would be it. I would also commend you on the work you are doing. We've heard about modernization a little bit. I would also really compliment you and Chair Atkins on what you did in harmonization. That allowed us to be able to do cross-margining with cash and futures. We've delivered a tremendous amount of value to the industry as soon as we got that clarity. So those are the things that I think excite me. And if we continue down that path, I think we could stay ahead of this innovation, and we can transform the U.S. capital markets into a place that I don't think any of us could imagine. So I'd encourage you to do that. Thank you again.
I like this guy.
Adina, I saw your placard up earlier.
Yep, great. Thank you very much, Walt. I'm Adina Friedman. I'm the CEO of NASDAQ. And I want to thank you very much for bringing us all together. And I don't want to reiterate every comment people have made, but it is really a very different environment for us to be able to have dialogue and understand each other and look at this collaboration across the agencies. We have been really focused on that issue of collaboration and understanding what the benefits are going to be and how we can turn the that spirit into action. And one area that we've been focused on is how do we continue to expand into the crypto world with our options business. And we've been able to leverage our equities markets to have ETF listings of crypto assets, and then have the ETF options listed on our options markets that's regulated by the SEC. But as we continue to take another step forward in listing an index, a Bitcoin index options product, that's where we've been in regulatory limbo now for a year and a half. So we'd like to understand how we can leverage the great collaboration across the agencies to say, okay, how can we get through this issue where you've got a product that really is it's a cross-agency product. It's one where the two agencies have to agree on how to manage the regulatory oversight. We are an SEC registered entity. We're not a CFTC registered entity in our options business, but we want to be able to offer more choice to our clients and also, frankly, to have a better competitive standing as we continue to look at the new world of finance that's developing. So we would encourage the CFTC and the SEC to continue to find paths forward to turn this great spirit into tangible progress. And then in other areas, which we'll talk later in the prediction space, I think there's a different orientation to trying to define very clear standards of which agency has jurisdiction and where there isn't clear jurisdiction. So again, we find that collaborative path forward. So thank you.
Great. Shane, good to see you.
Hey, what's up? I'm Shane. I'm CEO of Polymarket. I know time is of the essence, so thank you for having me. Chair Seelig and Amir, Michael, Walt, you guys have been incredible. It's, I come from a point of view, right, where you have these moments where there's new technological innovations. And it's moments like that where, you're 21 and you're a tech nerd and you're entrepreneurial and you're enterprising and, you want some sort of upward mobility. And it's kind of those fringe technologies that have a lot of legs where you have a chance to build something that's on the frontier that maybe a lot of the more experienced people here may think is too small to begin with, and go and make something meaningful. So I've been, humbled and grateful as an American to be able to build something from scratch that has been impactful and make meaning, and by no means perfect. And I'm my first go around at this, learning along the way. Have learned a lot from many people in this room. So one thing that I wanted to mention, which I think is just an important distinction, is like I look back at our arc from starting right at the beginning of the pandemic, and I know in 2021 was the first time we went to the CFTC with a DeFi legalization proposal, which was how to do it in the US, et cetera. And I started Polymarket with no money as a solo founder. And the idea of lawyers, I didn't even know. There's no ChatGPT. Like, you're kind of, I know, forgive me for being so naive back then, but I kind of went into it was like, hey, anything's better than running out of money for rent. And so, I think the main parting, as you guys are sitting here and trying to, ask entrepreneurs and founders and executives of these companies, the thing I would say is like, from our point of view, we've always been like, hey, we'll do anything to go and figure this out, right? And, we bought the DCM DCO. We didn't know if they were going to be a lot more approved. So I think we paid a lot for it. And I think that the most important guiding principle is that, it can be very tedious. It can be a very difficult process, but there has to be a way to do it in America. There is capital. You can raise capital. You can hire excellent operators. You can go and get scale that way. You can get the best lawyers. So I'm sure, all of us have. But, if something's impossible to do and there's really no way, it's extremely difficult. It's an extremely difficult position for someone who wants to go build an honest functioning business and grow it as an American. So what I would say about, the current state of affairs is like, I feel as an entrepreneur, as someone trying to innovate and be inventive, I'm just extremely grateful for the commission, for the chairman, for President Trump going and kind of giving everyone like the cover to be able to say, hey, we're going to go and adopt innovation. We're going to go and embrace all the people who are at the cutting edge of these new tech spaces, in this case, finance and all facets, and like see what they want to build and figure out how they can do it responsibly. Because the most important thing, and the thing I think people maybe like conflate the most, is like you have to distinguish between the technology and like an innovative technology and the actual like financial primitive. And there's some times where you'll end up in a place where, hey, the financial primitive can be kosher, it can be legal, it can be something you can regulate, and the technology is different. And it's moments like that where the competence and the commercial instinct and like the willingness to engage of the public sector, of the commission in this case, is such a multiplier on the ability to innovate domestically. So anyway, I'm extremely grateful. Thank you for having me, and just really excited about what's ahead.
Thank you, Shane.
We are the same age. This man's a billionaire. Got to give him credit.
Looks like we have about 4 people who haven't spoken yet before our break. So I have it in order: Carla, Scott, I think I have Sergey, and then Vladimir, and then we'll take a short break. But Carla?
Hi, thanks. I'm Professor Carla Reyes, and I want to
Thank you for the opportunity to be here. When I listened to the roadmap earlier, I was particularly pleased to hear that part of the roadmap is providing rules of the road for developers of financial protocols, because I do view the last administration's largest misstep, perhaps from the CFTC perspective, to be the trio, that set of 3 consent decrees along the lines of Open, DAREDX, and 0x, which left developers of financial protocols in a bit of a bind, frankly, in terms of understanding precedent and how it applies to their ability to build things that are regulated under the CFTC's jurisdiction. So I do hope that that remains the focus of the roadmap, and I hope that it remains the focus of the roadmap whether or not Clarity advances, because although BRCA is included in Clarity, in most drafts anyway, and although BRCA is quite good and important, it is quite narrow in the protections that it provides developers, and it would not actually address the issues raised by those 3 consent decrees under the prior CFTC. Secondarily, I would encourage in the writing of the rules under the roadmap a functional approach, which from a regulatory theory perspective does share some attributes with principles-based regulation, but from an execution approach takes a slightly different tact. In part, it would keep you away from words like taxonomies, frankly, which I detest, because taxonomies very quickly become out of date, and instead would guide you to look at the difference between, as was just said by a colleague across the room, between the technology itself and the financial primitive as separate entities, and really understanding what the heck is going on so that you can regulate from a functional approach. But broadly speaking, I just wanted to turn the attention of the discussion to those developer protections, because I do think it's a core piece of the roadmap that you laid out, and I hope that it does not go overlooked, whether Clarity is advanced or not.
Thank you, Carla. Scott.
Let me extend my thanks as well to the chairman and the CFTC for holding this event. It's encouraging to hear that we have a kind of a 2-pronged attack. Clarity provides some important reforms around federal preemption, which you've heard here today is an important thing. Regulatory clarity, very important that the CFTC and the SEC work together on products and in infrastructure solutions. We're working through that cross-margining that Frank mentioned. You have an important role to develop conflict of interest rules to make sure that both existing and new infrastructures are working off a level playing field and a clear playing field. Cross-product margining is critically important. There's a provision in Clarity requiring rules around that, and clarifying broad participation to provide liquidity, including bringing banks and their customers in, both as liquidity providers and offering their customers access to these important products. Separately, you have a big role in this building alone to address, and it's encouraging to hear that you're working with staff. Things around, as Don mentioned, custody and segregation. Rule 1.44 needs to be addressed to address wallets. Rule 0.149 to address eligible depository rules and what a depository could or should be if we're going to add new ones to that. Margin around haircuts. We believe it should look at the underlying product, not the delivery mechanism, i.e. tokenization. Think about making sure that these are all risk appropriate and making sure that we coordinate on capital regulation. Margin haircut methodology and cross-border regulation. Rules have been written. It was noted earlier. We have MiCA. We have rules all over the world. Bringing your leadership together, coordinating that internationally is also important. And then there's the importance of legal certainty and netting, making sure that that works. Thinking about how we have the opportunity with tokenization to move assets quicker, to settle them quicker, to clear them quicker, but we can't forget about the efficiency offered by netting. And I think Frank has mentioned there's not enough capital in the world, cash in the world to settle growth. So we want to make sure that we think about this in a most efficient way. On the 24/7 risk management, coordinating an ecosystem-wide transition, i.e. making sure that clearing and risk management keeps up with trading, we think is critically important. Making sure that we have the funding and clearing rules very well established around margin treatment and delivery. good sound risk management default mechanisms around some of the new infrastructures, whether it's going to be auto liquidation, how retail versus institutional is treated. And then, of course, maintaining AML and KYC rules that we have today that are applied broadly. Those have to be adhered to as well. So a lot to do. Greatly appreciate your enthusiasm and interest in solving these problems. Thank you.
Great. Let's turn to Sergey.
Great, thank you. Firstly, I'd like to thank you for creating clarity and fairness in the financial markets. I think that's a cornerstone of America's success and one of the reasons so many people build so many great applications in the American financial system. I think we shouldn't lose sight of that. That your two agencies, the SEC and the CFTC, are finally working together productively rather than fighting with each other publicly, I think is in and of itself a massive improvement, both for the reputation of the US, the trust in the markets, and obviously all the outcomes that you come together with a single unified vision instead of 16 different regulations over here and 25 over there that all conflict. And then that American innovation thing doesn't happen, which none of us want because we all live here, right? Now, we at Chainlink power thousands of applications. We power the majority of DeFi. And I've seen hundreds of people decide not to build applications in the US. So for every Hayden or Shane who have the strength and the will to stay in the US and build innovative, high quality applications in the US system and for the US consumer, there's thousands for each one of them that left, closed it down. And I know that personally because I'm their infrastructure provider for data, cross-chain, everything else beyond and in between. So that's a very serious cost, in my opinion. And I've personally been living that cost with those founders for now well over 7 years. And a lot of them, they're just not here to speak today because they're not doing this anymore, right? And they're not benefiting the financial system or the American consumer. It's a very, very serious issue, and I'm very thrilled that we're addressing it. Now, the thing that I think is going to happen next is extremely clear. The tokenization of equities is going to create a lot of on-chain value. And historically, how this industry works is when value appears, the corresponding markets and financial products appear around that value. Now, the US equities market are the majority of the global financial system's equity, value and flow right now. And if the global financial system moves on chain, well, then you would want the US financial system to move on chain at the same speed or ideally faster if you want to retain that 60% approximate market share, right? So this is really, I think, what we're discussing, and it's very important because it determines America's global position in the global financial system. And just to point out, two key things that we've been discussing here, collateral management is massively improved. On a very basic level, you go from 21/5 to 24/7, and you reduce risk massively because there's much more transparency about what's going on with that collateral. It's a no-brainer. Anyone can do the math there, 21/5 to 24/7, right? That's already valuable. That's huge amounts of value. And then to the point that was raised from the CFTC about security, that is a massively improved aspect of private key security, blockchains, smart contracts. That is, I think, going to be increasingly valuable as AI decides to attack financial markets and to try to manipulate financial markets. And I think blockchains and smart contracts and oracles are going to be uniquely capable in withstanding those cyber risk threats, which I'm more than happy to speak with you and any market participants about. So thank you very much. And I think we'll all make a great new financial system together. Thank you.
Thank you, Sergey. Vladimir, let's go. It's the face,
Thanks so much. I'm Vlad Nowakowski, founder and CEO of Lighter. We've been building in the US from day one, and so it's been great to contribute to American innovation as part of this group here. We really appreciate the chairman's leadership in putting this group together and doing that. So I guess the point I want to make is, as builders in DeFi, I think there's been for a long time kind of a misconception about DeFi, and from our perspective, DeFi is not a regulator's enemy. In fact, it should be a regulator's friend. Having transactions on a ledger in a verifiable way, it actually makes it a lot easier to do the kinds of tasks that a regulator needs to do in terms of transparency, in terms of consumer protection, in terms of fairness. And so we've been very encouraged by the leadership and the staff at CFTC to really understand DeFi and understand how it's consistent with the CFTC core principles. I'll give you an example, like what's been the most robust payment system invented? It's probably Bitcoin, right? And why is that? Because it's verifiable, because it's open source. If there's a problem with it, anyone in the world, the good guys will find that problem before the bad guys, and things will get patched up. And so with that said, I think as we think about the technology going forward, the financial infrastructure of the US in the future, I think decentralized verifiable finance is a big part of that, as it relates to cybersecurity and operational resilience as well. Having more and more technology evolve to an open source verifiable stack will be important. And even I think a couple of folks raised the question of ADL. We would argue that even that functionality, as long as it's done in a way that's fair, transparent, verifiable, can be consistent with core principles and protect the consumer. So anyway, great to be part of this discussion. I know everyone is waiting for the break, but I'll leave it with that. Thank you.
Well, thank you, Vladimir, for wrapping that up. This does conclude our discussion on the evolution of the regulatory framework for crypto. We're going to take a 10-minute break. Please be prompt in coming back, and we'll dive into our AI and prediction market discussion. Thank you.
Alrighty, guys. Well, I'm not going to stick around for the AI portion of this, but I do want to give a massive thank you. We got 8,500 people here joining the program. If you enjoyed this content, smash that like button. Now, I want to give a huge thank you because we're 2 hours and 48 minutes into this stream. I had actually only planned a regular Good Evening Crypto for today, but I'm really grateful that we got to spend this time together. And I thought there was a couple of key things that I wanted to kind of reiterate people of. Now, I know a lot of people haven't been able to watch this whole stream, so I wanted to play you guys Brad Garlinghouse speech at this event because to some people it was very underwhelming, but I think it speaks volumes as to what's really being discussed behind closed doors with the United States government. And I also want to give a massive thank you to every single donation, every single person who hits the like button. We really appreciate you guys. I kept the ads off for the entire stream because I didn't want ads interrupting. I think that's ridiculous when people do that. So huge thank you, every single donation and every single like button click. It is really appreciated. But we're going to wrap up today's episode. I did see that the XRP price chart is pulling back. Let me say something. If you're newer to the market, this is totally normal. We need to figure out where there's some levels of support here before we can rally once again. Now, you don't have to defer to me. Tune into guys like Blockchain Backer. They're probably going to give you a better analysis. But for me personally, we always see these pullbacks. We always go through these back tests. This is business as usual. So don't be worried whatsoever. Just keep paying attention to what's being broken down here. And I think there's massive momentum coming in the month of September, rallying all the way until the end of the year. But here's the clip from Brad Garlinghouse speaking at the event in case you didn't see it. Just about 1 minute and 30 seconds, and we'll break it down.
Sorry. Well, I was going back to the first question. Thank you, by the way, for hosting all of us. It's an honor to be here. I'm Brad Garlinghouse, the CEO of Ripple. As many of you know, Ripple had the unfortunate reality of being at the center of the bullseye of the SEC's lawfare in the previous administration. And suffice it to say, my headline for today is what a difference leadership makes. I think it's profound, as you've heard from several people here, how significant that shift has been. You asked for some examples. I think it was Brian that referenced that you didn't want to invest $5 million and have $4 million go to legal bills. Ripple spent $150 million in outside legal counsel during our 4-year battle with the SEC. Most companies would not have, and frankly, other companies were bullied into submission prior to the lawsuit with Ripple. Suffice it to say, from my point of view, and I think everyone here would probably agree, the status quo is not good enough for consumers or for innovation. I think it's absolutely imperative we have these clear rules of the road, both to protect users, but also hold companies accountable and give responsible businesses the certainty to build here in America. You asked for examples. 80% of Ripple's hiring for those 4 years was non-US. Even today, our second largest office is London because of that legacy that has shifted under the leadership of this president and this administration, the CFTC and SEC. I think we all can agree that the technologies represented at the tables here can make moving money faster, more efficient, and more accessible. but we have to have clarity to unlock that potential responsibly. So thank you for your leadership, and thank you everyone for being.
So there you have it, guys. That was Brad Garlinghouse remarks there. Now, obviously, he was referencing the XRP ledger when he said, we have technologies that are ready to scale payments cheaper, faster, better here inside the US. We just need regulatory clarity. And this was a very exciting episode. We got 8,600 people here. If you had fun, smash that like button. But more importantly, if you don't follow the channel, click that subscribe button. We go live every single day at 11:30 a.m. Eastern time. We talk about XRP. We talk about the Clarity Act. We talk about whatever you guys are interested in. So massive thank you. And hopefully, if you're a new listener, you enjoyed enough to subscribe. And I want to give a big thank you to Nazi here, who says thank you with the Arabic writing. Shout out to you, my friend. I see you here every single day, and I want to give you a huge thank you. But we got over 8,600 people. If you had fun, you enjoyed the stream, smash that like button, leave some of your thoughts in chat. I'd love to hear, do you guys believe the XRP rally is over, or is this thing going to continue as we head into the back end of this week? Now, we may even get some other announcements, some other statements out of Brad Garlinghouse later today. I'll be keeping an eye out for that. I'll post some of those on my X, but we love you guys. We appreciate you all. And thank you for hanging out with me for nearly 3 hours today. We'll see you guys in the next. So if you're looking to implement the same strategies that we do here on Good Evening Crypto, I would encourage all of our listeners to click on the Merlin link below and sign up for ITrust Capital as well. Now, why are our listeners going to do this? By leveraging the Merlin application, you can create a profit plan for yourself so you know exactly where you're going to be exiting this market. But leveraging ITrust through a Roth IRA product, you can take advantage of tax-free crypto gains during this crypto bull market. So I would encourage everybody, click on the link down below, sign up for ITrust today, and take advantage of our $100 free sign-up bonus.